Good morning, everybody. Welcome back to another episode of The Market Open. It is Monday, August 12th, 8:51 a.m. I am late. I'm late, but I'm late for a good reason. I was late coming back from the gym, okay? So that's a good reason to be late. That's why we got the protein shake now that we're going to drink. Where it's like, I was late coming back from the gym, so it's an okay reason to be late. I hope it's not the worst reason in the world. But no, actually, I got late coming back from the gym. But we're here. We're live. We're getting started. Look, this is a really exciting market open. I was talking about it last night from the Sunday stream because the one thing I wanted to see this morning was, can Palantir hold 30? And folks, we're at $30.27. We're at $30 freaking $27. And this is going to be a really interesting market open because it seems like in the pre-markets, volume is about 500,000 shares in the pre-market. People are normalizing paying $30 a share. In fact, right now they're paying $30.27 a share. We got to a high of $30.36. We haven't gone below 30 in the pre-markets from what I am seeing. I think we dipped at $29.83. So at $8.05, we dipped just below $30. I know the pre-markets is still a small amount of volume in terms of sample size for what we're going to see as the market opens. But this is very, very exciting. Last night, the core thing we were thinking about was, would Palantir be able to hold $30? And we'll see when the market opens in about 40 minutes. But as of now, it's holding 30. So exciting stuff. I'm wearing kind of this like Palantir gym gear that Arnie was wearing it on the Palantir Weekly the other day. So this is Iliano got us both this stuff. I think this is kind of stuff that you could wear after the gym. It's like, it's one of those things you wear after you sweat and stuff. So it's like, it's I thought it would be appropriate today to wear as we're holding 30. And now the question is going to be, can we keep up to 31, 32, 33, etc.? Can we keep this train going? My thoughts on this as we get into the market open, let me bring up everything that we're going to be talking about today. Got a lot of macro stuff. We have earnings to look at. We have earnings to preview for the rest of the week. And we have a ton of different indicators that are going off that I think could be bearish or bullish in the context of the broader economy. I think the new range is going to be 28 to 32. That is my idea. Now, can this thing get crazy and we pump to 35 because people just start buying it up and no one wants to sell because everyone's like, well, you know, how fast is it going to go? How high is it going to go? Yeah, I think that could happen. And I think things could get really exciting and really crazy. But realistically, I also know that if it gets to 34, 35, a lot of people are going to be taking a lot of profits, and that could act as a lot of resistance. And, you know, the valuation is going to get up there. The price of sales right now, the price of sales is 31.4. It is the most expensive name in software. Forget the price to earnings, because I don't think that's the best metric to look at for growth names. But price to sales is a little bit better of a metric, in my opinion. $67 billion market cap, $2.7 billion in revenue. If that guidance is low, maybe we come in at 2.8, 2.9 billion. Still one of the most expensive names, but now potentially one of the most expensive names that's being normalized at 30 because the market is ready to give Palantir that premium and excited to give Palantir that premium. And we're going to see if that premium can maintain itself. NVIDIA in the pre-market's up 1.2%. SoFi up about 0.45%. Intel up 1%. CRM, Salesforce kind of flat. CleanSpark down 0.61%. Snowflake up 0.5%. Oracle up 0.2%. If we look at the Mag 7 in the pre-markets, Microsoft is up 0.62%, Apple's up 0.32%, Google's up basically flat, Amazon's up almost 1%, Tesla is down, and NVIDIA is up 1.29%. Futures last night indicated a red open, but we are basically green. I mean, the futures weren't that bad last night, so seeming like the market's going green. S&P is up 0.25% at 534, and the NASDAQ QQQ is up 0.32%, 451. IWM is down 206. Makes sense. If tech is up, NASDAQ's down. And then Robinhood is at 1823. Robinhood up 1.73%. They got a rating upgrade from Piper Sandler to $23. We'll talk about why they got that upgrade and what the substance of the upgrade consists of. But they did get upgraded today by Piper Sandler from neutral to overweight. And specifically, Piper Sandler mentioned, hey, the pullback looks like a massive opportunity on Robinhood. So we'll talk about that as well and keep going from there. All right. Thank you, everybody, for being here. Thomas, thank you for becoming a new channel member. Really appreciate it. Thank you for becoming a channel member. Did anyone go to the gym this morning? Put in the chat if you went to the gym this morning or you got a workout in, or if you're going to get a gym, or if you're going to go get a workout after. the show. Sarah, good morning from Croatia. Sarah, thank you for being here. Good morning to you as well. When does the S&P make changes next? So the S&P decision, I think, happens in September, if I'm not wrong. It's either September or December, but I believe it's September. So that's going to be the next rebalance. And that's another crazy thing. Hey, will Palantir get into the S&P 500? The S&P 500 run up tends to be, for Tesla, it was up 40% on that. Now it collapsed after that, right? But the initial run up gets so many people excited because A, there are fund managers buying the stock, but B, there are people that realize fund managers have to buy the stock. And so they pile in because they think, all right, if, these people are going to buy the stock, then we have to get ahead of it as well. And that could potentially lead to more momentum. But I think, I don't know if it is definitive that it happens this year. I do think that the institutional volumes are not the best. However, I think the S&P committee looks at the company they brought in last quarter that was tech related, which they saw what has happened with CrowdStrike since then, in terms of just a fiasco with their Y2K system. And they may think, hey, maybe we got it wrong. Maybe we need to consider Palantir. And so maybe that's the argument that kind of plays in, and Palantir ends up going in. Walt says, I had 2 donuts. Dude, I can't lie. I love donuts as well. Donuts are awesome. So I don't blame you. Sarah had a wine tasting. Okay, that's awesome. David said he's at work. Marie got her workout done. Bunch of people are at the gym right now. 45 minutes every day on an elliptical. I love it. I love it. Tesla was such a valuation at the time, though, so fund managers need to rush to capture the weight of it. Yeah, Tesla was that was December 2020. They got into the S&P. So the split, they still had not gone through the splits they had gone through. And so the valuation obviously was much lower than they had right now. Palantir, if it has a stretched valuation at the time of the S&P inclusion, maybe fund managers aren't going to be as eager to get into it or as aggressive, but there are going to be some that are going to have to buy it. And that should be a decent pressure or buy side pressure on the stock. Cool. So let's keep going from there. Palantir is going to be very exciting as the market opens. Again, first day after the crazy run. I was saying last night on the Sunday Future Show that it is kind of a, dude, it was kind of a, like Saturday when I woke up, I was just exhausted because it was emotional on Friday, going through that whole day, being with everybody, streaming for like 8-10 hours and just trying to see this bad boy hit over 30. So it was a really, really fun day. It was emotionally exhausting. And I think a lot of people probably woke up as well on Saturday, just like, wow, like Friday was a hell of a day if you kept up with everything. And now we're going to see if this week continues to keep up with everything. And we can keep going from there. Institutional ownership is about 42%, 44%-ish. It's not at 60%, which is what I think the S&P committee looks for. So, we'll see, if it ends up getting there. But as of now, it is not fully there yet. Granted, now, I don't know if that's the biggest barometer that the street looks at to get into the S&P 500. I think that's one of the main things they care about. And if it's not, then I think we get in. Again, Palantir is the second lowest institutional ownership in all of the S&P 500. So out of all 500 companies, we are the lowest. Maybe if they overlook that, we get in. If they don't, then that's going to be one of the things that might keep us from getting in. A couple of earnings. Monday.com had earnings today. They beat EPS by 67%, beat revenues by 3%. Let me pull them up real quick. Monday.com, they're up 9.5%. That's good. Monday.com is a work management software, if I'm not wrong. It's similar to Atlassian. So it's how you organize teams. I used to watch a lot of their commercials back in like 2015, 2016 when they were aggressively scaling. So they're up 9%. That's good to see. It's nice to see that a software company continues to scale, and that's going to be important. Barrick Gold had earnings today. They're up 18% on EPS and revenue up 1.6%. Let me see if their earnings, if that had an impact on the stock. They're up 2.8% as well, $17.91. No other companies had major earnings this morning, but tomorrow or a little bit today after the bell, we'll see other companies and see how they report. All right, let's get into some macro stuff. So last night on the show, there were 2 main things of macro that I talked about. Another CRM. Yeah, it's another CRM. It's basically another CRM. There's 2 big things I talked about in the context of macro, and that was the relationship of the Max 7 with Q3 earnings and also yield curves and what's happening as well with the yield curves. So first, let's start off with yield curves. Right now, the 10-year yield curve is at 3.953. 2-year yield curve, 2-year treasury yield curve is at 4.069. So they're still inverted. What does that mean? It means the 2-year is giving you a better return than the 10-year. This is what signals a recession when the yield curves invert. And that is not what the broader market has wanted, because it is signaled an upcoming recession. Now, we haven't had the catastrophic upcoming recession that the yield inversion has proven to us, or has historically proven to us was supposed to happen for the past 2 years. On Friday, and what I'm also looking for today, the yield curves uninverted. Now, they're not consistently staying uninverted, but when they uninvert, it tends to be more of a bullish signal that the worst is done. There can be arguments that it's a bearish signal and that it's in a certain stage of a cycle. If they uninvert, then you could lead to a recession that's coming up. But for the most part, that tends to be a bullish thing. So one of the other things I'm looking about in the context of macro today is, do the yield curves continue to uninvert, and can they sustain an uninversion? I also think that'll be really strong for the Fed to announce that, yeah, it might be time to finally cut rates. And so that's going to be something that we are going to need to be able to see. This is coming off of jobs data that we got on Friday. The jobs data said that less people were applying for unemployment. We're saying that they had no job, right? We're putting in a jobless claim, which was 233,000 versus 240,000. If that number continues in the next 2 weeks to be below expectations, we're going to be in this Goldilocks zone where the Fed needs to learn how to cut rates, but while recognizing that if they don't cut rates fast enough, i.e. September, that unemployment level will spiral out of control like it did 2 weeks ago, which caused the meltdown on Monday of August 5th. You could argue that the hurricane maybe skewed some of those numbers, but if the Fed does not eventually cut rates, we're going to see a lot more unemployment. A lot of you people in the chat said anecdotally you felt that layoffs are happening at your companies and around your neighborhoods. I saw it in the chat last night at a massive pace. And so people do feel that unemployment and the weakening of the labor market is starting to occur at a profound level. It's just a question of how profound is it before the Fed ultimately realizes that it might be time to end up cutting rates. Morgan Stanley said its base case is for a resilient economy to achieve a soft landing, and that remains unchanged this morning. They also said they expect Jerome Powell and the Fed to implement 3 rate cuts in 2024. Right now, I think 2 rate cuts would be amazing. 1 is like what we need to get things started. If we have 3 rate cuts by the end of 2024, I do think we're going to start to see a decent amount of money move back into the markets. But right now, I think the Fed, or the broader market, is skeptical if we even see 2 rate cuts. Couple other quotes. Fed Governor Bowen said she still sees upside risks for inflation and continued strength in the labor market, signaling she may not be ready to support an interest rate decrease when U.S. central bankers meet in September. I think she's supposed to say this right now to continue to get people to feel that inflation is a concern. We're going to get inflation data, CPI, on Wednesday. So I'll be live on Wednesday, 8:20 a.m. That's going to be a very important day. That's going to be one of the most consequential and important days going into the rest of the market for the year. I say that every time we get CPI data, but that really is the truth this time, because we need CPI to come in with a 2 handle. We cannot have 3%. We need 2.8. And if we get 2.8, I think we get a better chance of getting a cut. And then finally, Bank of America CEO said today, if Jerome Powell and the Fed don't start cutting rates relatively soon, U.S. consumers could become dispirited, which is another really important thing in the context of cutting rates. Bank of America CEO did a really long interview on Sunday, and he said, hey, it's time to cut rates because the consumer is starting to feel the pressure. We felt it through Disney earnings, through McDonald's, through Starbucks, through Nike, through Lululemon. A lot of different companies are at least claiming the consumer is starting to get weaker. And I don't think the consumer is necessarily in a horrible position, but they will be if they can't get a mortgage for the next 2 years, or they will be if they can't, take a loan on a car or get a decent level of auto insurance without having to pay a massive interest rate. They're just not going to consume as much anymore. So not only does the consumer need a rate cut, the other reason Bank of America CEO said, hey, we need a rate cut, was this chart right here. We've talked about this many times, but U.S. banks are facing $517 billion of unrealized losses. What does this mean? This means my parents that got a mortgage from a bank in 2020 for like 3%, well, the federal funds rate is now 5.5%. Banks make money on net interest revenues, so their net interest margins have started to go to shit because the top of the Fed's fund rate is almost double what they issued a lot of mortgages at, or any loans besides mortgages, over the past 3 years. Once rates come down, the artificial losses, or not artificial, but the paper losses on their balance sheets start to come down. And that's good because their tangible book values go up. So a lot of the banks have already been priced in for this to happen, which is why you saw the rally in regionals, the rally in XLF, which is the bank ETF, KRE, the regional banking ETF. Bank of America hit a 52-week high. That's why Warren Buffett sold 5 million shares, because he realized, all right, I kind of got the pump that I was hoping for. And now Bank of America has retraced since then. So banks need it. Consumers need it. Small caps need it. And growth stocks, it's not like Palantir needs it, but it definitely would just help the overall environment for risk on assets, which would help a company like Palantir. Everyone needs it. The question is, are we finally going to get it? And if we do get it, I think it's going to be at least somewhat beginning to be bullish in the broader parts of the economy. Someone also said, Amit, we're not seeing layoffs, but we are seeing hiring freezes at my jobs. Ian says that. Yeah. I mean, there's a lot of tech companies have a hiring freeze. They're not hiring. I mean, just the fact that Palantir reduced their workforce, if you looked at the 10K and they increased their revenue by 27%. Robinhood, they added like 80 employees in the quarter. I mean, these companies, either they're, unicorns that know how to be really efficient without a lot of workers, which you could say that, or one other argument is AI is making them so productive. They don't need to hire, 1,500 product managers because they're able to operate effectively without that. So, I mean, we are seeing more tech companies stop hiring as much. And we saw Intel do layoffs, which is sad because the government gave them $8 billion and they're doing layoffs. That's like insane. Dell is planning more layoffs. Lots of companies as well are engaging in layoffs, especially some of these blue collar workers are getting laid off in factories, which is not good. A lot of people also were saying last night, this was a good conversation. We were saying, was 2022 actually a recession? And the Biden administration, I think, was able to redefine a recession, even though it was a recession of 2 quarters of negative GDP growth, because they were adding about 450,000 jobs a month in 2022. Now, if you were a investor, inflation was at 10%. That ruined the investing assets that we were invested in because the Fed had to raise rates dramatically. And obviously we saw Pound to go to $6, Tesla go to 100, like everything sucked. But we were adding 450,000 jobs a month. In fact, the reason the Fed was raising rates was to stop adding so many jobs. A lot of that jobs was from the COVID recovery. Now, in the context of tech, I remember tech was seeing massive layoffs in 2022. I mean, I think Zuck's fired a good 15,000 people. However, the reason I don't think the economy collapsed in 2022, like the real economy, not just the stock market, because inevitably the stock market recovered by early 2023, was a lot of those jobs were not blue collar jobs, right? Those were product managers making 250,000 a year. So if they had some savings and they had some ability to find a different job, maybe that wasn't going to give them, 250 grand. Maybe they would start making 80 grand, but still a decent, amount of money to be making in America. That's why we didn't see this massive recession. In 2008, like everyone lost their job, right? Like regular factory workers, people at waitresses, right? Like everyone who was working any type of blue collar job, nurses were losing their jobs. And 2022 was a tech recession that didn't affect as many people. So I think in 2022, we were able to avoid that for a bit. But now if we don't cut rates, maybe 2024 shit ends up getting pretty intense if everyone across all different sectors, like we're already seeing in a lot of the data, ends up losing some of their jobs. Sled says, I work in the spa business and we don't see any slowdown. We are currently hiring and this business usually goes down if it was a recession. So it's difficult. And see, this is the type of anecdotal data that I get from people every day that makes me wonder, what the hell is going on? Because you should see something like a spa business, which is a luxury item for people to do, right? People are going to cut down on their massages and their pedicures if shit's hitting the fan. If certain businesses are hiring and it's actually ramping up and increasing, now maybe that's in a rich neighborhood or maybe there's all these different factors, but I think we are inconclusive on the state of the consumer. And until Q3 results come in, we're not really going to know if the consumer is struggling to the extent that some of these companies say that they're struggling at. And as a result, I don't think J. Powell should want to find out or take the risk, which is why he should cut. Cisco's also laying off 4,000 people. Yeah, we are seeing a lot more layoffs end up coming for the broader part of the economy. Sanjay said he's jobless for the first time in my life and it's scary as hell. Oh, wow. Okay. So there are some of you, I would imagine, that also have lost your job and unemployment is starting to affect in a variety of different ways. Some of you said in the chat you are watching from your job. So it's interesting. It's like, I don't think we have a definitive argument yet on if unemployment is massive or if it's starting to affect in certain subsectors. But we're going to find out in the next 3 months. And the unemployment data is definitely going to give us a peek into how bad it's actually getting. Robinhood at $18.25. Palantir is still holding. Oh, wow. There's a red candle. Hold on. That red candle is going to go away. Yeah, the one you see right now. Yeah, that went away. Webull is weird. It has these random swings. But Robinhood or Palantir right here at $30.28. Let's see. Let's see if we hold it. We got 20 minutes until the open. I'm very excited to see how the bid starts happening on Robinhood or Palantir and Robinhood. And we'll see if people sell it off. Robinhood right here, $18.28. S&P at 534 on the day. What do you guys think in the chat? Let's get a lot of comments here. Do you think, I'll do a poll as well, and then we'll move on to some other macro news. Do you think the unemployment we are seeing is real? Is the question. Or do you think it's affecting certain segments of the population? So are jobless claims real? Let's do it like that. Basically, if you say yes, you think we have more unemployment than the market's projecting. If you say no, your argument is that unemployment is not as weak as people are saying. So we put that up in the poll. How would you feel if Palantir closes at $29.99 today? Dude, if Palantir can just maintain like high 27s for the rest of the year, I would be incredibly happy, dude, because that's still up 60% year to date. Like, I'm not greedy at all. Dude, I think as Palantir investors, we got to remember some stocks have not had a good year, and we cannot be greedy. I mean, I would love to see 30, but I'm also not going to be a super. If we can hold, even if we hold $25, I am very, very excited to just have a basic year of up 50%, quote unquote basic year. Now, granted, I think the momentum is on 30, and I think 35 is where we're going to close, but 25 is good enough for me, and we'll keep running until 2025. What would you consider as a re-entry price for Palantir? So I think a re-entry price for Palantir is $24.25. I think the actual re-entry price, given the nature of how much momentum has started to form for the company, is going to be 27. I don't think it's going to be as easy to get 24.25. And I'm not just saying that because we had $30. Think about the last time we got 24.25. It was on August 5th. It took the Japanese carry yen trade to unwind for us to even get into the low 20s. And then instantly, like an hour later, we rebounded and we stuck at 24 before earnings. So 24 would be a really exciting price. I think 27 is where most of the dip ends up getting bought, unless we have unless some whale, either a whale offloads their position to get us to 23, or we see an entire slowdown. If Dan Niles is correct, the market doesn't bottom until September. If the market doesn't bottom until September, then we're going to see Palantir back at 22, 23 again. But if the market does bottom, before, if the bottom was August 5th, then I think 27 ends up being the new price. But we're going to have to see over the next couple of days. And today will be the first test to see how long can we last. Speaking of Japan, we talked about this last night, but again, the carry yen trade, I think JP Morgan was right that it has started to unwind. If you look at this right here, traders have slashed their yen short the most they have since 2017. So when JP Morgan came out and said, hey, we think that the trade is starting to unwind, it does seem, based on looking at the option contracts involved on this short the yen, go long US equities trade, it is the lowest it's ever been. And we haven't heard of any hedge funds kind of blowing up off this. Maybe in the next couple of weeks, we're going to hear about certain funds that go out of business and that'll become like mainstream news. But there's no there's no Lehman Brothers yet that we've seen, like 2008 that we saw, that goes belly up, which is a relatively mild carry yen trade that becomes unwound. Again, Bank of Japan said they're not going to raise rates anymore, which is what has resolved a lot of things. But that is very bullish for the markets, because that means that type of a black swan event kind of rearing its ugly head again doesn't seem like it's going to hopefully continue to happen. Chris says we're likely to see some volatility, but overall market should recover nicely. Yeah, I would agree as well. I do think we end up having that strong Santa Claus rally towards the end of the year, but we probably will have some more volatility going into the election as well. Okay, real quick on Robinhood, then I want to give some thoughts on the Mag 7 that I was thinking about last night. Robinhood got upgraded by Piper Sandler to $23. For those asking, do I like Robinhood here? Yeah, I like Robinhood under 20. I think $18 is still a very attractive price for me as well. I was adding aggressively last week, almost every single day post earnings. So basically Thursday and Friday, I added to Robinhood. Here's what they said. We think this pullback presents an attractive entry point into an innovative, fast-growing brokerage platform. In the near term, we expect net interest income headwinds from future rate cuts to be largely offset by the second-order effects of increasing trade activity and margin loan growth. We also expect Robinhood to benefit from the launch of a new web-based trading platform and the rollout of index options and future trading later this year. Longer term, we expect Robinhood to benefit from 1, continued growth in global retail and derivatives, 2, the generational wealth transfer from baby boomers to their children, 3, a strong position in crypto, and 4, international expansion where Robinhood is still in the early stages. Upgrade to $23 from neutral to overweight. I agree. And I think the big thing here is some people are saying the bear case is when rates go down, Robinhood's net interest income is going to come down as well. That is true. And for every 25 bips, you will see a $40 million headwind to their net interest revenues. However, their trading revenues are going to massively expand if their net interest revenues go down, because if you're not getting 5% from your APY, or you're not getting, you're in general, your money staying flat, you're going to probably put it into equities, or you're going to try to get some yield from somewhere, especially if it's on an investing app and it's not like in a money market fund, because you can't buy those on Robinhood. So you're probably just going to put some money into the markets. And so it's a relatively small amount, $40 million of trading revenues they have to recuperate for. You get a couple million options contracts or a couple billion more in equities volumes, and that changes everything. And Robinhood ends up doing really well and makes up the difference. So I think the price target from that makes a lot of sense. We showed this last night, but here's 30 seconds of Vlad talking about how they got $500 million in one day on August 5th in deposits, which just blew my mind.
And in that earnings call, we talked about July volumes being 20% higher than June, which was the last month of the last quarter. And August has been more of the same. And August is typically a pretty quiet month for retail trading activity. And we haven't seen that this year. We've had $1 billion in net deposits in the first week of August, and the $13 billion we had in Q2 was a record high for us. Just Monday of this week was about $500 million of net deposits into the platform in one day. And
so that's crazy. $500 million of deposits into the platform is absolutely crazy. I mean, it's very hard to get $500 million coming in, but it seems like retail bought the dip on August 5th when shit was hitting the fan. Retail wanted to buy, and so they put in a lot of money into Robinhood. Now they have $1 billion of deposits in the first week of August. Another piece of breaking news, apparently Robinhood just appointed a new CTO, Jeff Pinner. Jeff Pinner has joined Robinhood as Chief Technology Officer. Jeff is deeply resonated, a respected innovator who will help us accelerate our product roadmap, scale our infrastructure, enhance customer experiences, and drive operational efficiencies. This broke 7 minutes ago, Jeff Pinner. So let's look him up right here. Looks like this guy was at Cruise before coming to Robinhood. If this is the same, yeah, because he left August in 2024. So Jeff Pinner, he is the new CTO of Robinhood. I found out about this literally 2 seconds ago, so I will deep dive into who he is. But Lyft, he was the CTO of Lyft for 3 months. He was the CTO of another part of their business for about 2 years. He was a senior staff engineer at Twitter, then a senior engineer at NASA. Went to Stanford, went to Princeton. Then was at Cruise for a year. Now he's at Robinhood. Resume looks good. Resume looks very Silicon Valley, tech companies, experience as CTO. And now he is at Robinhood. So that's going to be exciting to see who this guy is and what this guy ends up doing with Hood. But yeah, I'm also excited about it. And then final thing here is Piper Sandler said that their October event is going to be massive. I think so as well. I think the October event is going to show the flywheel of the desktop trading app compound in terms of the conversion on the users. And I just think 17.18 is a pretty stupid price, barring the broader market stays up. Again, Robinhood's a bull call in the market. Market needs to stay afloat in order for Robinhood to still accumulate a lot of that premium. It's starting to become a diversified business that is not contingent upon the market, but it's not there yet. And I don't think it will be for at least another year. So as long as the market holds up, I think these prices are exciting. I just don't see what the downside is either. I mean, unless the market goes to 500 again on the S&P, your downside you saw was $14. If you have to DCA at 14, like I would, that's not scary to me. And it's not at 24. When it was at 24, I wasn't saying, all right, it's a heavy buy because it's at 24. Like the upside to me was $25 and maybe it goes to 30, but the upside's pretty much baked in. 17, 18, I think the upside is much stronger. And so we will see. We will see what happens. Daniel with the puns this morning. Do you think he will lift the stock price? I think so. I appreciate you, Daniel. I like the puns. We got to have the puns in the morning. We have to have the puns in the morning. Where's Palantir? Palantir. I'm excited for market open, dude. Palantir is at $30.24, so we're still holding 30. In 9 minutes, let's see how this ends up playing out. Okay, let's discuss a bear case around the markets because I am obviously very bullish. I wouldn't say I am perma bullish. I look at the data every day, and if you guys have been following the show, you guys can see that after condensing a lot of the data, we come to the logical conclusion that it makes sense to be bullish. Here is a bearish thing I was thinking about last night, and a way to be bearish in a more sophisticated sort of like way around the Mag 7. So I talked about this last night on the Sunday show, but it's kind of two simple scenarios on how you can be bearish on the rest of the year. And it has to do with big tech. So basically, I think one way to be bearish is that big tech ends up spending more on CapEx, but doesn't see the monetization from that CapEx on AI revenues. And that ends up re-rating the Mag 7 again. So we already know the Mag 7, each one of them took a 15 to 20% drawdown, most of them about 20% from the top of July 16th all the way now to August 12th. So it's been a month. All of them fell 20%. The NASDAQ itself fell about 15%. If big tech again shows no multiple expansion or shows no AI monetization from increased CapEx, maybe that ends up being a world where the market gets tired of giving large cap the premiums, and they say, "Hey, Meta, we're not going to give you $530 because you're not giving us any more momentum, and it's hard for us to prove that AI is real." Now, Zuckerberg's going to be like, "Well, wait a second, we told you that we weren't going to be monetizing for a long time, so why are you so confused about this?" But the market might be like, yeah, you told us, but we still don't feel it's healthy enough to give you a massive premium until you show us the monetization. That is a potential bear case that could be going into Q3. All of Max 7 has been re-rated, but they've started to recover a bit. Unless they fall another 20% from here and Meta's at like 390, and then the street can justify giving them a higher premium because AI monetization still isn't here yet. I think that is one bear case. The other side to this being bearish is that the street sees that they're spending less on CapEx because the consumer is struggling. And if the consumer is struggling and Meta is like, hey, we're spending less on CapEx, then the street's like, well, wait a second. Why are you cutting back on the AI revolution that you told us you need to keep spending on? And that's when Google, Microsoft, Facebook, they're going to have to admit, we don't need as much GPUs as we thought. And as soon as that happens, NVIDIA gets re-rated instantaneously, which is not good for NVIDIA. I think they're going to crush Q2, but if big tech says they're not spending as much on CapEx in Q3, NVIDIA gets hurt. And then if they say, well, we see some consumer weakness, and so instead of firing people, we want to lay off on CapEx because that'll help us from firing employees, so that, because, in general, companies don't love to do layoffs. That would also signal to the market, oh, so you guys are on the brink of potentially choosing between employees and GPUs, and you're picking employees, which means GPUs aren't that important, which means we don't even know why we're giving you a massive multiple, because this AI revolution doesn't seem like it's happening if you guys aren't continuing to spend as much on CapEx. So I think there's two different variations to it. I think either the street thinks they're spending way too much on CapEx and not getting any revenue momentum, Palantir at $30.27 right now, or they stop spending on CapEx and the street thinks that something's deeply wrong and there's some parts of the core business that are struggling, and in order to not hurt the bottom line, because the CapEx is affecting the earnings per share, they're cutting back on the part that they were told for the past 2 years is necessary for earnings growth and for this AI momentum. The reason I'm saying this is because I saw a chart last night that kind of triggered this entire thought, which is that the broader earnings growth of the Max 7 is slowing down pretty dramatically. It's going to be 17% next quarter, down from 57% if you aggregate all of Max 7's earnings over the past 3 quarters. So it peaked in Q4 2023. We're going to head into Q3. It was down at 29% in Q2, and it looks like it's going to be 17% in Q3 of 2024. And we saw this. Amazon missed on advertising. Google slightly beat on their top line. And then Azure, although it was such a slight miss, they missed on cloud. And so all of these slight little misses, Tesla obviously missed everything because Tesla is Tesla, but all of these misses have started to rack up a bit, and I think that's what's creating a little bit of fear in the markets around the Max 7, which maybe is the opportunity for the Max 7, but it's also one of the arguments of like, hey, maybe we should, wait a little bit until we really get more momentum and justification that the Max 7 is worth buying for. So we'll see how that plays out. I'm on the side of a more bullish Max 7. I think even if earnings growth is not phenomenal, they're going to show enough CapEx to justify the spend for NVIDIA, and they're also going to show signs of monetization. We saw GitHub have 400% year-over-year growth. Microsoft Teams is growing at 3 million seats. Like AI is starting to make its way. Meta with AI advertising is obviously starting to show more momentum, even if it's not literally direct monetization. It's definitely impacting earnings, and I think the market will be strong enough to probably recognize that as well. All right, we got 4 minutes until the market opens. Let's hear from Deepwater around where they think the tech volatility is going, and then we'll get into the market open and see how this ends up playing out. Elon and Trump will be speaking today. I will be streaming that live at 8 p.m. today, and so we'll see what Elon and Trump have to talk about as well.
Managing partner. Doug, good morning. I mean, among the many things going on in markets in recent weeks has been a little bit of a rotation out of some of the bigger crowded trades that has included some of the mega cap tech stocks. Where does that leave us right now in terms of, I guess, creating your hierarchy of opportunities?
Mike, it has been a volatile week. It's been a volatile month. And our bet right now is that the worst of the volatility for tech, at least for this particular correction, is likely over. And we've referenced this data before, but I think it's really important. From 94 to 2000, so going back to the last technologically driven sort of boom period we've seen in markets, there were 11 corrections in the NASDAQ over that period of 10% or more. And then Monday, when we had that yen carry trade sort of blow up, the NASDAQ hit down about 15%. And so when we look at that historical data, we actually think it's sort of a signal for psychologically just how do investors process corrections when we're in these technologically driven booms. And it feels like down 10, 15% from peaks is sort of this clearing rate where you get a little bit of the exuberance out of the market. And I think that's exactly what we've had happen right here.
Although when it comes to, let's say, semiconductors as a group, down 25% last week, I mean, from peak to trough, and then still down 20%, it just seems to be a little bit of a rethink of the AI investment cycle, when we're going to get payback on that. How is that playing through to the stocks that you focus on?
It is a little bit of a rethink. We've had more of this conversation about when will we start to see meaningful revenue from all of this CapEx that's going into AI, hundreds of billions of dollars, likely over the next.
This is what we just talked about in terms of the bear case.
Few years. And the reality is this for us. Number one, when we think of when we're going to start seeing payback, I still think there's this mismatch between the companies who are actually investing in this technology and the investors on the other side. I think investors are hoping to see payback, over the next year, 18 months. And if that's the case, they're going to be disappointed. I think we won't see meaningful AI revenues for a lot of these.
Which is where the street might get upset if they're going to be disappointed on this.
These companies for a year plus. And I think the companies like the Mag 6, the mega cap tech companies who are driving this boom, they have longer horizons in terms of how they're thinking about payback on this technology. So that mismatch is always a risk. When we look at where we're trying to play it, Taiwan Semi has been a name that we've owned now for almost a year. It's a name that we've liked for a while because when we think of this chip revolution, everybody has to use TSM to build these advanced AI chips. And just last week, Taiwan Semi posted their July revenue numbers up 45% year over year. It was better than investors were expecting.
Okay, here we go. TSM, they had a great month last week as well. So we'll see how that impacts them this week and for NVIDIA. Monday, August 12th, 9:30 a.m. All eyes on Palantir. The stock market is now open. Wake your ass up, ladies and gentlemen. Oh my goodness, we are holding $30. We are holding $30, and I wasn't sharing the screen. I'm sorry about that. We are holding $30. $30.60. $30.60. We are holding $30. Folks, this might be real. This might be real. I'm going to pull up the order flow resistance. This might be real, folks. We might be holding $30, and it might be the new 20. The next big wall is at $31. And dude, holy crap, we might hit 31, bro. There's only like 40,000 shares at 31. It's easier than the 60,000 we had at 30 when it was $29.99 on Friday. The bids are coming in, folks. The bids are coming in. They are, I mean, like you would think there's some price action to the downside, right? You know, we're struggling at $30.05, $30.10. No, we're in the mid 30s. We are in the mid 30s. Robinhood as well, up 3% on the day, 1845. So Robinhood getting some momentum as well, starting to see some more traction right here, 1846. Palantir at $30.37. It hit a high of $30.71, now at $30.37. Let's see if we can hold this. Let me go to some other companies, then we'll be right back. S&P at 534, QQQ at 451, Dell is at 93, SMCI 516. They're up 1%. SoFi is down 663, Amazon 167, Snapchat $9.10, Nvidia 107, Nvidia up 2.4%, probably off of the TSM results that we got last week as well. Intel up 1.17%, CRM, Salesforce at 253, Snowflake 125, Oracle 132, Meta's down at 516, Rocket Lab up another 1.5%. They were up 12% on Friday. Sweet Green up 1.8%. Zillow's down. Airbnb is flat. Google is up 0.53%. And Palantir, there you go, 30.79. Oh my God. Oh my God. I think we are about to potentially see 31. Dude, this is crazy. This is so crazy. Holy crap, folks. This is okay. What do you guys think? Do you guys think we see 31, or you think this gets botched? It looks like, from what I'm looking at, the bids. Look at this. It's at 30.94, dude. It's there's not even any build up here. It's just like getting up here. It's just running. The thing about, we talked about this on the weekly. Now the excitement is hitting an inflection point. The growth is not hitting an inflection point yet, but the growth has started to match the excitement. And that's where I think you're getting a lot of random people that are new to the name coming in. Now, I don't want to get too excited because we might just see some short-term run-up and then people take a bunch of profits at like 32 and it tanks back down to 27, 28. And that's very possible. You know, there's a lot of ways this plays out. But I don't think it's crazy to say that 30 might be the new 20 if we can hold it at least for this week. I mean, we got to hold at least for 1 week, $30. And if the NASDAQ ends up recovering back to 500, then I think Palantir is closer to 35. All right, we're at 30.99. There's only 9,000 shares at $31. So yeah, there you go. 31. Wow. 31. All right. It just got rejected. We hit it for like 2 seconds. Then it got rejected. I think we easily come back to 31. I don't think we say stuck at 30.94. How did it take so long to get from 29.99, but we go to 31 within 2 seconds? Yeah. Well, now the excitement's there, and 30 was very psychological. Breaking 30 was very psychological. And so now it's here. Dude, this is great. This is fucking shit. Man, I kind of like, this is awesome. 31. Now we hit 31 twice. There you go. Now we need to see a breakout above 31, get the bids coming in at $31 and see this bad boy running. Wow. Incredible price. I kind of had a feeling too, dude, after Friday, especially the close above 30, you kind of had a feeling that like, all right, things were going to start to kick up. I mean, now people are excited about Palantir. They're understanding the name, the media coverage. I talked about this last night. Yeah, there you go. $31.05. I talked about this last night. I did a long Twitter post on this, but the media coverage, it is my belief, over the next 5 years is going to aggressively compound. CNBC, Bloomberg, Wall Street Journal, Yahoo Finance, they will be talking about Palantir, if not every day, at least every week. And if they talk about them every week, if not every other day, probably every day, especially when this thing starts getting to $40, $50, it is going to be at the center of AI, Western values, NATO, defense, the broad shaping revolution of operationalizing LLMs. Like, there's going to be way too much to cover. There's going to be too much attention to amalgamate. That's what a media company does. They generate attention. And I think they're going to use Palantir to get ratings. And as a result of that, they are going to compound. That's great for investors because we're going to get millions of new people a week learn about Palantir, which is going to be exciting. Elf is down 3%. Elf down 4% now, continuing to get a hit after the earnings. Robinhood 1846 up 3%. So they're getting some momentum. They got upgraded by Piper Sandler. I still believe Robinhood is deeply undervalued, below $20. 25 is kind of my price target for the year. So 17, 18 makes sense. Piper Sandler put out a $23 target, saying they are overweight, and they believe that Robinhood as well. Again, I think for people that are like, hey, should I get into Robinhood? My biggest my biggest thing on this is just sell puts, right? If you don't want to buy the stock, if you're afraid that it's going to go back to 16, sell some puts for 17, for 16. Because if it actually does get there, you'll get paid to buy those shares, which is a great way to buy those shares. Palantir still at 31. And if if it runs up to 20, at least you picked up some premium in the short term, right? So I think the premiums are still pretty exciting for Robinhood at 17, 16, and you don't have to get into the shares if you still think that there is downside in that $16 range. Because $16 is I love that range. So if you can get paid to buy it at that range, that's what TJ and I, we sold 50 puts for $17, which our cost basis would be $16.50 if we got assigned, and we would be fine buying shares at that level. S&P at 533, HIMS at 1645, that's up 3%. CrowdStrike's down a little bit. Eli Lilly is slightly up. They had a good earnings last week. They were up 5% last week. Shopify, $70. Shopify crushed earnings. They're doing great. Lyft is down a little bit. Rivian is 1360. They're down 2.5%. Where's Tesla? Tesla down 1% at 197. The rest of the Mag 7, Amazon at 167, Google 166, Microsoft 407. Microsoft basically recovering to where it was at right before earnings. Apple 217. And then Meta at 515, basically flat on the day. Chris says, looks like Palantir is trying to close the gap below 31.34 from way back in February 21st, 2021. That might end up being a possibility. 31.18 right now on Palantir. Another thing is a lot of the technical analysis people that I follow are saying that there is a pretty aggressive cup and handle on Palantir that is, and Garcia talked about this on Palantir Weekly, pointing to Palantir to be $45 a share by the end of the year. If you believe in some of that technical analysis, you believe in some of those theories around the cup and handle, and you believe that Q3 is going to show even better growth and we get a couple rate cuts, I don't want to say it's going to be 45 because that's a $100 billion market cap. That's kind of insane. But I do think there is a chance if we have a huge melt up towards the end of the year. My target is 35 by the end of the year. I think that's more realistic. But the technicals are lining up, is what I'm hearing from most of the TA people I follow, and they think that it has a really good shot. Florida Mad Dog says, I really want to buy more Palantir, but not really at $31. Well, I feel you there. As someone who's been in the stock for a long time, I was talking to some of my friends last night in a group chat that are also been long time in Palantir. They can't fathom buying it at these levels. I mean, for them, it was even hard to buy it at 28. So if you've been long Palantir for a while, it doesn't feel comfortable buying it at these levels. However, I think two things on this. Number one, selling puts is not the worst idea here as well. If you're comfortable with 27, 28, the premiums aren't amazing on Palantir, but that's one way to kind of scratch the itch. Number two is at the end of the day, one of my friends, she had her covered calls, 800 shares, called away at 29. Remember that meme we did on Friday that you guys helped me with, the caption, which was this one right here. Should I tell her I sold $29 covered calls? Someone right here, one of my friends on Twitter, Jess, she had 1,300 shares get called away at $29, which sucks, right? However, if you believe, and this is taking a long-term perspective, if you believe Palantir is going to go to 300, and again, I don't want to sound like the super naive, exuberant bull right here, but let's just say that's a $600 billion market cap over the next 15 years, right? Maybe the next decade. Then $30 is still a 10x. But you can't buy it and then it goes to 27 and then you feel super bad about yourself, right? You have to really buy it knowing, hey, I'm looking at 300. I'm not looking at a retrace back to 25 if you buy it at $30. So that's the way I kind of get out of that there. It's one of those things where you just buy it and you just what I've genuinely been thinking about? What I've genuinely been thinking about, as much as I love Robinhood, I've genuinely been thinking about transferring all my Robinhood Palantir shares into a Schwab account and just not looking at it. Legit not looking at it. And it's not because I love Schwab or anything, but I don't want to look at my Palantir. I want to have it on a separate, I want to have it in some account that I legit forget about. And I only log in to do a monthly DCA. And I just I don't look at it. It has nothing to do with Robinhood. It has more so to do with I don't want to see it every day. Because if I see it every day, I'm just I just stare at it and I look at it and I'm like, you know what? I want to look at this literally 10 years from now. I want to look at this when I have 3 kids. And that's when I think of maybe selling it because I need to buy more diapers or something, So I've actually been, I probably won't do it because I love having it on Robinhood, but I don't know, maybe I have a separate Robinhood account and I don't look at it. But the point is, if you think it's going to $300, $30 is still cheap. It is a super great deal if it's going to $300, but it begs the question, is it going to $300? Let's do a little bit of a valuation analysis that I did with Steve. Palantir's market cap is $70 billion. They're doing $2.7 billion in revenue, growing 27% year over year. Salesforce, which is the cream of the crop in SaaS, is worth $240 billion, and they do $40 billion in revenue every single year. Salesforce has a price to sales of 6. They're growing at, call it 11% year over year. Palantir has a price to sales of 28. They're growing 27% year over year. That's kind of insane. I mean, Palantir has 27% of Salesforce's market cap, and they have 20x less growth because they're doing $2 billion in revenue versus Salesforce doing about $40 billion in revenue. So Salesforce is doing 20x more in revenue and only has about 63% of the, or 73% of the market cap of Palantir, which is kind of insane, right? It's kind of insane when you think about it. So from that perspective, I think the valuation can get you to feel, all right, you're paying a little bit too much, but this goes into the broader question. Do you think Palantir can be bigger than the Salesforce? I kind of think it can. I think it could be bigger than a CRM. Do we think the government business of Palantir scales to tens of billions of dollars per year, which justifies a multiple in and of itself as a defense contractor? I think that's the case. And do we think the SaaS business is a true AI play that Salesforce really is not operationalizing? Salesforce has Einstein, which is their AI chat, but we are moving beyond chat. If you believe that's the case, then maybe 300 on Palantir in the next decade isn't crazy. Amit is saying to sell Palantir to buy Salesforce. No, that's not what I'm saying. But it's just when you look at those numbers, it's kind of crazy, right, guys? Like Palantir is 27% of Salesforce's market. It's called 30% of Salesforce. A company that's doing $40 billion in revenue a year. Palantir is worth 27% of Salesforce, and they're doing only $3 billion in revenue, whereas Salesforce is doing $38 billion. I mean, it's kind of insane when you look at these. But then you realize the street is willing to pay a premium. And look, it's at $31, which means $30, at least paying $30 today. Volume is 12 million shares, has been normalized. People have normalized, at least on today, August 12th, buying Palantir at $30 because it's up 3.2%. Quite incredible. And so we'll see how the premium continues to evolve. But I do understand being scared to buy it right now if you've been long the stock. But you got to be really long to buy it at these levels and just not kind of worry about it over the long term. Pelosi buying Palantir. So she has not bought Palantir yet. If she does buy Palantir, we'll know in like 10 days because she has to just close within 10 days. If she does, that's when you sell the kidney. I mean, if Pelosi says, hey, I'm buying Palantir, that's when you sell the kidney. Because now if Pelosi makes it obvious, because it's obvious it is a defense contractor. Like if Pelosi dabbles in, that means Palantir is about to get some massive government contracts, and she knows about it. Everyone knows that she knows. So that's when I think you forget about the valuation. But so far she has not dabbled into the name yet. Someone said right here, Riva says, that's exactly what I did last year. I opened a Fidelity account so I wouldn't look. Yeah, I'm really thinking about it, dude. I'm really thinking about it. I think it's worth opening a separate account and just not looking at it, because at some point you don't even want to know anything about it. Your average, your cost basis, your position size. You just want to like have a DCA and know that you'll wake up years from now. And that also stops me from selling covered calls on it, because I got out of some $27 covered calls the day it dropped, and I got out of them for cheap, right? I made 80% on them. But it's kind of annoying, dude, because like if you still have those $27 covered calls, like you're underwater, and now you have to like, and again, I like covered calls, but sometimes when you have them on a name you really want to, own for a long time, and then the thing starts running, it's annoying. It's definitely one of those things. It's a tricky situation to navigate. It can be navigated. It's just annoying to have to navigate it. So if I had it in a separate account, I probably wouldn't even have covered calls on them. And that would make me, not worried about ever potentially losing the shares as well. Is it easy to transfer your shares? Yeah, it is. It's actually very easy. I looked up online. Like it's a super simple process. It's not too hard. You just have to like call them up. I think on the Schwab, they said you have to submit one form and you get the job done. And you don't even have to transfer your whole portfolio. You can transfer certain stocks in your portfolio to another brokerage. So they don't even have to like take out everything. Robinhood at 1838, up 2.5%. So Robinhood, let me check the order flow on that. We got to get above 19 on Robinhood to start making our way back to 20. Nice to see some momentum on Robinhood today, again, with the price upgrades they got this morning. That's probably helping it. So the next wall on Robinhood is at 1850. There's 12,000 shares, not that crazy. And then at 19, At 19, there's about, there's not that many shares. At 19, yeah, there's nothing. There's no, the next wall is at, there's 150,000 shares at $19.30. So until 1930, I don't think there's massive resistance if the volume comes in for Robinhood and we see some more buyers. But 1835 right now on Robinhood. S&P just went red, 531. So Palantir now $30.58 just dropped below 31, but we're still green on the day. HIMS at 1615. Bitcoin. So Bitcoin fell because there were rumors that Iran is getting much more serious to attack Israel, along with there was this nuclear reactor that kind of went in flames in Ukraine yesterday. And so some geopolitical instability. This is the first time Bitcoin tanked on some Ukraine news after a long time. But it recovered, or it's starting to recover. It's at 57.6. Now it's at 58.7. So you're starting to see a little bit of recovery right there. It made its way to 62 last week. So for a day, I think on Thursday night, Bitcoin went to 62,000 and it was awesome. But I'm getting really tired of it. At this point, it's just like staying stuck within 57 to 63. We're not really seeing that big sort of bull market Bitcoin to 100,000 thesis that a lot of people have been talking about. And not just the Uber bulls, pretty much like anyone who's been in Bitcoin for a long time feels that this is the trajectory that Bitcoin should be on. And maybe we're still in the part of the capitulation phase before or after the halving event, and it's going to take some time, which I think is probably true, but it hasn't happened yet. And so I think if you're hoping for Bitcoin to 100K, which I would hope, that would be awesome for a variety of stocks. That would be awesome for Robinhood, Coinbase, etc. Obviously the Bitcoin miners. I don't know if we get that anytime soon. And I think we might have to end up waiting on that until 2025. But we're going to see. Now, the rate cut, as Breakfast Pizza says, it's a measure of liquidity. It will happen. I hope that rate cut ends up leading to the liquidity increasing and Bitcoin reflecting that. I really hope. If that doesn't happen, that's going to suck. And you can't blame me for being a little jaded and thinking that might not happen. But the rate cut hopefully should create the liquidity necessary for September to see a large rise in Bitcoin, which, September is supposed to be a bad month for stocks and the broader market. If we get the rate cut, maybe September ends up being a decent month. And October, we see a little bit of a pullback, but September ends up being not that bad because liquidity increases. And, if we get a 50 basis point cut, then I think things are going to get very exciting. But yeah, Bitcoin's probably held off. There's no real catalyst. The Trump speech was the main catalyst, Palantir 3068, and the Trump speech is done. And he said some good stuff, but Bitcoin doesn't care anymore about that. So, and it was at 67,000 that day. So it's fallen pretty dramatically since the Trump speech. And so I guess we just have to wait and see how it plays out. Palantir right here at 3071. So Palantir still green. S&P and QQQ just went red. So we got to pull back on the indices. IWM is also red, so that's not going green. Even though S&P and QQQ are green. So let's see if Palantir can hold up being green, even though the NASDAQ is red. That tends to correlate with the NASDAQ just a little bit. On Friday, it went totally bonkers and it went the opposite direction. But let's see how that plays out. SoFi is down. So I found out on Friday, SoFi is introducing small business banking via partnerships with American Express. Market just went red. Yeah. I didn't know how to interpret that news. It was kind of weird. A lot of the SoFi bulls that I talked to also were like, why are they not doing it in-house? This was the tweet by Noto. He wants to do small business banking via some partnerships. Again, it's not really the sort of vertically integrated ecosystem for small businesses. Like I have a small business. I have an LLC. I've wanted to be on SoFi for years now. Now going through a partnership via American Express, I don't know if that's the best way to do it. We had DDI said right here, I think SoFi needs to build business banking and lending as an in-house vertical as soon as possible. I personally was hoping to see that release inside of 2024. He's one of the biggest bulls on SoFi. And even he's like, hey, I don't really know why we're doing this partnership shit. Can we actually just build it ourselves? And so maybe Noto thinks his go-to-market is going to be easier if he goes through the partnership, which is probably correct. But again, this is my point about SoFi is I think they sacrifice product experience a lot of times for other things. And if the product experience isn't the best, users might not adapt to it as much as well. Robinhood 1829, Palantir $30.79. ELF is still down 4% on the day. SMCI is up 2.2%. SMCI bottomed at 486 last week. CleanSpark down 7%. Not only because Bitcoin's down, but they delayed their earnings. Earnings weren't the best. on Friday. And so CleanSpark right here down 7.8%. Let's look at the crypto stocks. Bitfarms is, wow, Robinhood's the only green one. Robinhood's the only green one, and that's because Robinhood sold off a couple weeks ago, but also because it's diversified outside of just crypto. MicroStrategy is down 2%. Marathon's down 9%. Coinbase is down 2%. CleanSpark down 7%. Bitcoin and Ethereum slightly green on the day. Douglas says, Amit, SoFi can miss me with that partnership branded banking. I have no desire to park my business with a bank that can't bank. Yeah, dude, I don't blame you. I don't blame you. And I don't want to harp on SoFi, but like that was weird, dude, because everyone was looking towards small business banking as like a big catalyst for SoFi. And for them to do this like third party partnership version of it, I don't know. It was just weird, dude. I was just like, I don't know why they're doing that. I don't get it. Like, I'd rather you wait another 10 months before you unveil it, but unveil it in the right way. So that's what we got in the context of SoFi and Bitcoin. Bitcoin right here, 58,487. What do you think Elon and Trump are going to talk about tonight? That's going to be very interesting. 8 p.m. I will be streaming that live. 197 on Tesla. I think that's going to be an unhinged conversation, and it's going to be really interesting to see how that goes down. I'm very curious what they're going to talk about. But they're probably going to talk about the election. They're going to talk about EVs. I mean, I think they're going to talk for a good hour and a half. And I mean, I think there's going to be a couple million people tuned in on that. That's going to be like a crazy conversation. Celsius 3771. Celsius also has been just a horrible growth story over the past couple of months. Like they peaked at 99, fell 50%, more than 50% since February. And growth has slowed down. Now their earnings were good, but their earnings weren't as good as they were in January. So, I mean, there's also no narrative around Celsius anymore. Like there was never a big narrative around energy drinks. And I don't think the narrative has started to, form. So if you're buying Celsius, you're really buying the next evolution of maybe how people consume drinks, even though I don't think that's like the best bull case. So Celsius right now kind of stuck in no man's land right now as well. Fortinet at $70. They had a great earnings, and then Enphase at 108. They're up about 1% as well. They're going to trash talk everything. Yeah, that's probably going to happen. They're going to talk about wokeness. Yes, that's probably going to happen as well. I wonder how they talk about the EV adoption. I mean, I think Elon should just address the elephant in the room, which is that Trump has been like kind of anti-EV, and just like have him say on a big stage what he actually thinks about EVs. AMD at 134. AMD closed their acquisition today of a European company for $650 million. So that is something that happened this morning. The largest private AI lab in Europe, Silo AI, they completed a $665 million acquisition, almost $1 billion, over $500 million. So AMD completed that acquisition today. I think he needs to like tell Trump or ask Trump, what do you really think about EVs? And Trump needs to set the record that he doesn't hate EVs, but he's not like super bullish on them. And maybe that'll clear it up for a lot of the Tesla investors that will be listening today. About what Trump thinks. Apple at 217, Google at 163, Bitcoin 58. Where's Palantir? Palantir $30.40. So struggling from 31. It got hit at 31, now at 30.40. Now today's going to be interesting as the market just turns red. Robinhood as well, 1817, still green for the day, but down from 1850. If Palantir can maintain 30 throughout the day. So I think that's going to be a key thing to look at. If we can hold up on these levels. Short QQQ went to 693 for a split second. So that happens sometimes. A lot of times there's glitches in these stocks. Yeah, I see it right here. There's a 693. I don't know. Maybe there was a massive order that came in, but that should be bullish. Maybe someone shorted it real quick for a second. They borrowed a ton of shares. That could be anything. That could either be a glitch or that could be a dark pool. That could be something that happened right there. But short QQQ goes up today. Again, well, actually it was at 931. What probably happened is because the S&P was up almost 1% at 931 when the market opened. So maybe that's why it fell to 693, but that's too dramatic of a collapse even for the S&P to go green. So maybe it was a short-term reaction because this is an inverse ETF. So all of those have very unique idiosyncratic ways in which they operate. But yeah, QQQ is up on the day. Palantir $30.33 right now. And then S&P is down about 0.2% right now. Is Rocket Lab on my radar? Yeah, I like Rocket Lab. I have a little bit of Rocket Lab. I don't have a massive position, but incredible earnings. CEO is awesome. I think Peter Beck is amazing. And they're up nicely. They were at 412 on Monday. Now they're at 536, and they're holding these levels. And they're developing a larger following. Volume's already 1 million shares, $2.6 billion market cap. If you believe in SpaceX, SpaceX already has a $200 billion market cap. So if you kind of believe that SpaceX ends up winning over the long term, there's probably going to need to be a couple of other players, and they don't have to be trillion-dollar companies, but to be $30-40 billion companies over the next 10 years, I don't think that's crazy. And right now, it's there. It's just a question of how long it takes for them to play out and how many failures they have across, launching rockets, which are obviously not an easy thing to do. Okay, so let's see what other updates we have and what other news we have. So let's pull up some price target upgrades and keep going from there and see what we got. Lyft is still on my radar. I haven't done DD yet. Really, dude, on Saturday, let me know what you guys did in the chat. On Saturday, I did nothing, dude. I legit did nothing. It was one of the first Saturdays in a while where I did nothing. So I did no due diligence. I didn't look at stocks. I didn't look at anything. I just kind of did nothing. I was just exhausted from Friday, dude. Absolutely exhausted. So I still have to do some DD on Lyft and see what we get with Lyft. Okay, so some headlines. JetBlue, they are announcing a plan to raise $400 million to convertible senior note. Let's look at JBlue. Are they up on that news? They are down 12% on that news because they're raising more debt, which makes sense. So JetBlue is down. We saw the Robinhood news on the upgrade. Four, which is another fintech. I don't follow this one too much, but this one is up 0.25%. They got Mizuho price target to $85 from $75. They had second quarter results. Despite a little bit of the volume guidance that they gave, they believe 2Q subscription levels are going up 90%, which is good. So 4, if you have that one has been upgraded today. And then Walmart has a tactical trade saying $74 price target from Evercore ISM. Walmart right here is at 68. The logic on this is our positive tactical trading call is focused on Walmart's earnings release on 8/15. We see an inline quarter and anticipate that Walmart will reiterate its full year sales and EPS outlook, reaffirming its status as a relative safe haven amidst the volatile consumer backdrop. Interesting. So Evercore thinks Walmart picks up momentum if the consumer gets weak because they end up going to Walmart. That actually makes a lot of sense. I mean, Walmart, Costco, it's hard to imagine these places take a massive windfall. Costco right here at $8.55 if the consumer is weak. Because where's the consumer going to go? They're not going to Target, which tends to be very expensive in the United States compared to Walmart. They're going to go to Walmart. Palantir now $30.11. All right, so it's struggling to hold up 30. Let me see on the order book flow. What do we have on Palantir? So this is where now Palantir is going to test itself. Yeah. Here we go. Now it's getting hit. $30.03. There are a decent amount of orders to buy at 30, but there's not like hundreds of thousands of shares. There's more tens of thousands of shares if it falls to like $30 or $29.99. So now let's see if the sell side pressure becomes too intense. There you go. Palantir just went red, just went below 30 for a second. Again, there are a bunch of buyers at 30. But I don't know if there is enough buyers to keep it above 30. And if there are, this is good because we should be testing low 30s and see it break through or bounce above 30, which means it's starting to really normalize the $30 price range. But it's gonna have to do this many times to see if that happens. Amazon as well will be a safe haven for consumers. The one thing about Amazon, which is weird, is that on their earnings, they said the consumer's weakening. And they said we're seeing, that's why they missed on their midpoint of their guidance. So that, and the other thing that Amazon missed on was advertising. The street wanted $13 billion. They put up $12.8 billion. $200 million is not that big of a deal, but it does get the street a little concerned that our advertisers not advertising as much because consumers aren't buying products as much, right? Or is that just like a random slight miss on advertising? So I think next quarter, they're going to have to resolve a bunch of those claims, consumer and advertising based. Cloud was fine. That was the part of the business that's just growing phenomenally. But those two other parts of the business, they're going to have to resolve as well. to get people excited. Tesla, so Palantir still holding up nicely above 30. Tesla down 2%. I don't know what the reasoning is for Tesla to be down. I don't think they got any price targets or downgrades or anything. It's probably just random volatility around Tesla. Tesla, one headline, Model Y is the best-selling electric car in Europe. So that headline came out this morning, which is good. Here's the chart on that. But Tesla's still down on the day. So here's the chart. Tesla Model Y, then you got Tesla Model 3, January to June 2024. So first 6 months of the year, Tesla Model Y, 102,000 cars were sold. Model 3 was 60,000. Volvo EX was 39,000. The worst selling car was a Kia Niro and a Mercedes. That was an EV. You know what's funny? I don't know any other EVs besides Tesla. Like I know they exist, but like I don't really know them by name. Like I don't know what a Audi Q4 e-tron is, or a BMW iX1. Like I don't know any of these cars. I know what a Model Y, a Model 3, and a Cybertruck are, and that's it. So it's always interesting when I see a different type of EV, because like to me when I think of EVs, I just think of Tesla. I'm like, oh, it's just Tesla. It's like that's the market. Obviously, I'm not a car guy, but still. That's how I think of it. Palantir at $30.05, really struggling to maintain 30. I mean, it's holding it, but it's like just on the edge of it. So maybe that's how the price action plays out for today. But at one point, it's going to break to the downside or the upside. And so we'll see. But again, I do think if we fall to 29, 28, there are plenty of buyers. And if there's plenty of buyers, that's where the dip might end up being. I think lowest maybe 27, 26 now as well. I mean, what do you think of BYD? I think they're having phenomenal execution in China. I don't know if BYD ends up like overtaking the EV markets. I do think they offer a very competitive cost-adjusted product. Bitcoin as well, falling by about 1% right here to Tesla. I mean, like I might be saying the stat wrong, but I think a BYD is like 70% cheaper than a Tesla. You know, it's like in the $15,000 to $20,000 range, whereas Teslas are $40,000 to $50,000. So I do think for the average Chinese consumer that doesn't have a ton of money to spend on an EV, boom, you got a BYD. But I don't know if they have the same advantage of FSD. Now, there are some rumors that BYD has a ton of data that is allowing them to come up with a self-driving vehicle that uniquely can work well in China. They had that Uber partnership last week. That was good for them. Uber, by the way, is at 68.29 right now. But overall, I mean, I just think the potential of Tesla is greater than a lot of the other EV companies. Robinhood has a new CTO. Yeah, we mentioned that on stream. I'm going to deep dive into who this guy is, but seems pretty impressive. He was the CTO of Lyft, Stanford, Princeton guy, worked at NASA, so seems like a really exciting dude. Robinhood right here at 1820 right now, 1829. And so we'll see how this guy ends up becoming, we'll see how this guy ends up. We'll see where he ends up going to lead Robinhood as well. Okay, so what else do we have going on? We have some price action here at 1824 on Robinhood. Any other main headlines that I'm seeing? Fear and Greed, we're now at 26 on Fear and Greed. Fear and Greed right here at 26. Guys, real quick, I'm getting I hear the bell ring. My dad actually has some medicine that I have to pick up. So let me just play this video real quick. He gets some medicine that's delivered to him. I'm going to go pick up the door real quick. I'll be right back. I'm going to play this video. I'll be right back.
Data in focus this week. We'll get the July producer price index tomorrow, followed by consumer prices on Wednesday and retail sales on Thursday. And on the earnings front, reports from Home Depot and Walmart will offer some color on spending, inflation, and the state of the economy over the next few days. Joining us now to talk about how all this fits into the market, Stephanie Link, Hightower Advisors, Chief Investment Strategist and Portfolio Manager. Yeah, good morning, Steph. Obviously, it probably makes sense to dial back a little bit, a couple of weeks to figure out what the markets have been contending with and where we sit right now. Obviously, a little more of a pronounced slowdown flavor to the economic data, destabilized the markets in some degree. We got some kind of aggravating factors from the unwind of these popular hedge fund trades, yen carry trade. And now it's about, okay, we're down 5-6% in the S&P 500. Has that repriced the market enough either for a slowdown or created more opportunities for you?
Well, I think we're not done with the volatility, Mike. We know that seasonally August and September are tough months for out of the year. The good news is that we're kind of still in the thick of
We got the goods. We got the medicine. Here we go.
Earnings, and we're getting real-time information from companies. And at the end of the day, there is a lot of noise out there with regards to the economy, with regards to the Fed, with regards to elections, and a lot of other things happening, the yen carry trade unwind. But earnings matter the most. And at the end of the day, that's what I'm paying attention to. And so all of last week, I was actually buying last week because I heard from companies like Eaton, like Lam Research, like Amazon, like Bank of America. They all had really pretty good things to say, and earnings are actually getting revised higher. So I think you want to use some of the volatility to be adding to positions. And so kind of that's what I've been doing.
Yeah, I mean, there's no doubt.
Okay, there we go. So this medicine, I've not been able to pick up every time I'm doing the market open. Usually it comes like once a month, and I always have to end up driving to like the FedEx Center to get the medicine. But we finally got the medicine. I didn't tell you guys, but my dad got pretty sick a year ago, and he got through the sickness he had, but now he has to take medicine every month to, keep him afloat. But he got really sick back in 2023. So things are good now. He's getting better. But that medicine, I always miss it because I'm in the market open. For some reason today, I actually heard it. Like usually I miss it and I have to go drive at like 5 p.m. to get it later. But then I heard it. And I was like, oh shit, like I know that like they're there and I can get it. So yeah, he's doing well now, but had to pick that up. So, what Stephanie Link is saying right there is that she still feels there's going to be a bit of more volatile times to come. We saw that with Dan Niles explaining the same thing. Hey, we think volatility is not going away. We think volatility is probably coming. There you go. Palantir right below 30. So it's getting hit right there. But the question is going to be, is the volatility long lasting? And is there a need for the volatility, which obviously the carry-in trade we talked about and a variety of other things that are contributing to that volatility. The VIX today, let's see where the VIX is at. VIX is probably up a little bit. Yeah, VIX is up 2.5%. Will that volatility get to the volatility that we saw back in August 5th? Which I still don't have a name for. We got to think of a good name, guys. I'm trying to figure out what to call the crash of August 5th because I don't think it's Black Monday. It has to be like an interesting name when we refer to August 5th. So if you guys have any suggestions, please put it in the chat. But whatever happened on August 5th, I don't think that happens again. This VIX spike right here, I don't think that's happening again. And so although we have to be used to more volatility, if it's not going to be as volatile as it happened on August 5th, then maybe we're okay. And maybe that is kind of the bottom that's baked in. All right, Palantir at 29.90. So if you bought Palantir at 31.30 today, I think that was the top, right? What was the top on the day? The top on the day was 31.20. You're probably a little upset, a little annoyed that it's falling right now. But let's see. We just hit 29.85. Now back to 29.91. Let's see if we can hold it. Again, even if we hold the high 29s, I, as a Palantir shareholder, I have like zero problems with that. I'm like very happy about that. But let's see if it can make its way back up to that $30 range. And again, this is where we have to see how much of the dip buyers are like willing to spend, right? Like how much are these people finally ready to say, nope, we're not going to let this go below 29.28. I see on the order book flow, there's thousands of shares ready to be picked up in the high 29s. So that's why you're seeing it stabilized right here. But throughout the day, we're going to see if that ends up playing out. NVIDIA's up. NVIDIA is, yeah, that's right. Wow, 4%. That's like $60 billion on NVIDIA. That's a big move. Why is NVIDIA up? Does anyone know why NVIDIA is up? Why is NVIDIA up? Swap to a Monday. The Moody Monday. Yeah. Kamikaze crash. We need a good name for Monday, dude. So when I refer to it, I can, you guys know what I'm talking about. NVIDIA right here, 109. Let me see if there's any news on NVIDIA. That is weird. Are the semis moving with it? Let's see. Are the semis moving with it? Yes and no. So Intel's down, On Semiconductor's down, Broadcom's down, Qualcomm actually got a downgrade today. That's why they're down 3%. Everything else is up slightly. ARM is up and AMD is up 1%. Micron is up, Dell is up, SMCI, Marvell, TSM is up. Wow, 4% move on NVIDIA. We haven't seen a 4% move on NVIDIA in a long time. I mean, I think we saw it last week, but it was very brief on the recovery, but that's when everything was recovering. Nvidia, let's see. Is there any news on Nvidia? This might just be a technical breakout as well. Also, I mean, we know earnings are coming up, and at the end of the day, people get very excited about earnings for Nvidia. And if we don't think Nvidia is going away anytime soon, then I mean, we're probably going to see even more momentum for Nvidia, or like people start to get more excited about it. Any thoughts on Rivian? I like Rivian, but I mean, I like Tesla more. And Rivian, the time to buy Rivian was at $8. The time to buy Rivian was at $8 to $10. And that's when I, on the stream, was publicly considering buying it. And then I looked at their cash burn and I was like, okay, this probably doesn't make sense to buy. I didn't know they would get a $5 billion injection of capital, which would have, pumped any options or stock that you would have bought at that range. But going long Rivian is not super exciting to me. And again, I don't know as much about them, but I just like, if you're going to pick an EV company, it would be Tesla, not a company that's losing as much money as they're losing, because they're just going to need to keep raising cash, which is why I didn't buy them in the first place. And if I bought them at 9 or 10, I think you kind of got lucky if you bought them at $8 to $10, because I don't think anyone thought they would get $5 billion of free capital, which just like boosted their tangible book value. So, that was a thesis on Rivian then, but I don't have enough confidence in the product. Also, the CEO is not inspiring at all. I mean, we saw him last week speak on CNBC. I'm like, dude, like, how could this was not an interesting guy to like go long on. So I still think it'll do fine, but Tesla's more exciting to me if you're going to pick an EV company. Michael says, I bought below 8, doubled my money, and then pulled out the original investment. So now I see if they succeed or not. Yeah, I think that was the right play. Michael did it perfectly. But buying it at 13, 14, hoping it goes to 30, like, I just don't know what the bull thesis is on that, especially how much money they're losing. They're losing a lot of money. And there's already a general EV winter we're going through, right? Elon even mentioned, like, people are just not buying EVs as much as they were in 2019. So that's why Elon is like pivoting the company to selling FSD and rides, and how he's getting analysts to think about it. If Rivian is not selling rides or FSD, then like, are people going to buy hundreds and hundreds of thousands of Rivian vehicles? I don't know. Especially if people are buying more hybrids. Like, I think that is some massive headwinds that they're going to have to deal with over the next couple of years as well. SMCI is moving. That is fair, along with Nvidia. SMCI at 5. Wow, SMCI up 5%. So the bottom, I guess, was 486 last week. 478 was the bottom. It's at 535. So what's the math on that? That's up almost 5%, 535. That is no, 11%. That's 12%. SMCI is up 12% from the lows if you add it aggressively below 500. Celsius just turned green. NASDAQ just turned green. Robinhood 1839. Where's Palantir? Palantir 29.98. So Palantir still trying to get to 30. I think the S&P just went green. Yeah, S&P just went green. There you go. That's also probably helping Nvidia a ton. And then the NASDAQ just went green. Look at that V-shape, dude. Nice V-shape. 448.55 up to 451. There you go. There you go. Amit, I have trading at Schwab. Is it easy to change to Robinhood? Yes, it's very easy. All you do is you go to Robinhood, just like literally on Google, type in Robinhood account transfer. I mean, I'll send you the link right now. And you just immediately allow you to you can transfer your platform, your stuff in. It takes like 5 days at if that. There's the link right there in the chat, and then boom, you can immediately transfer it in. So it should be super easy. Palantir volume, wow, 26 million shares. I think the average is about 44 million. So you have more than half of the shares in the first 30 minutes of trading, 45 minutes of trading. It's pretty incredible, dude. Pretty incredible. A mid to woman, nice V shape. Yo, why'd you guys make fun of me when I said I'm going to pick up the door? Like, isn't that a common saying? Someone like pick up the door. That's like a common saying, right? Or oh no, people say pick up the phone. Oh, never mind. That's you're right. That's pick up the door makes no sense. Yeah. Sanjay's upset. He's like, no, it's not. Dude, I thought it was a common saying. Yo, last night someone sent a super chat and they used the word occult, which means like mysterious, and I pronounced it oculate. Oh boy, the chat, let me tell you, the chat went off. And I didn't notice for a good 5 minutes. I was talking about their super chat. They were talking about aliens or something. And I was, so like, I don't know if it's really that oculate. And everyone's like, dude, It's called a cult. And I'm like, what are you talking about? It's called, and then I saw it on Google. I was like, oh, it's called a cult. I'm telling you, I'm not good with words. I don't know how to say certain things. Like how it was, dude, I heard this yesterday. I was like, what the heck? This is what it was.
A cult.
I was like, oh, I thought it was like I saw this and immediately I thought oculate. Okay. I don't know what it is about my brain, but it just reads it reads stuff in a different way. And I thought pick up the door made sense. I really thought it made sense. Palantir just getting hit at 30, dude. It touched 30 again now at 29.92. So the street is not letting it get to 30 yet. Again, I think they need a bit more buyers coming in. The volume is exceptional though. So the fact that it's not holding 30 on this volume means it's not a problem with volume. It's just a problem with sell side hitting back at it. 29.85 now on Palantir. But again, can't get too greedy. 29s are still really awesome for Palantir. Just a question of if it can actually hold 30. 29.76 on Palantir. Where's Hood? Robinhood 1841 up 2.79% on the day. SoFi still down. Amazon 167. Snapchat 913. S&P goes green at 533.8. Where is SMC? Or where's Nvidia? Nvidia, wow, dude. Nvidia's up 5%. Nvidia is not slowing down. Nvidia is not slowing down. Amid a Palantir pullback to 26 for just a day would be rocket fuel. I agree. 100,000% agree. Again, I think we talked about this on Palantir Weekly. The pullbacks now are going to get bought up, dude. Like this is one of those pullbacks where, I mean, think about Nvidia. Like when Nvidia pullbacks get bought up, I'm not saying Palantir is Nvidia yet, but the compounding media attention around Palantir is starting to get pretty exciting. And that is likely going to lead to more people hearing about the name. Again, I think media companies are going to be talking about them more than before. And they're going to think that a dip to 25, 26 is a good opportunity, which conventionally you could say 25 to 26 is still a bit pricey. But I don't think you can say it was as overvalued as it was before because the growth has reaccelerated. And the only reason it's getting this premium is because, again, the growth reaccelerating makes it more attractive at these levels. So I think it ends up just being rocket fuel. In Nubank, earnings is tomorrow, correct? Nubank's is tomorrow. That's going to be exciting to see as well. Another fintech. So we'll see what Nubank says. Was there any specific details with the Microsoft partnership? So there was no money or years involved. It was rather like kind of Microsoft allowing Palantir to be the exclusive partner of implementing Azure OpenAI LLMs into the DoD. So I think there's some more details in the press release, but it's not like a money type of deal. It's more so like a collaboration that they're doing versus like actual money involved, which is good because it just means more government customers that Microsoft has access to are going to start to get a little bit more of a benefit from the partnership with Palantir, which is what we tend to want to see more often than not. And again, there's only a couple of companies with IL level 6 security clearance, and one of those happens to be Palantir. So that is going to be important. What about that Air Force deal? Actually, thank you for reminding me about that, Gene. So I forgot to mention this. I didn't even mention this last night on the Sunday show. We got another $8 million deal for the Air Force. So here's the contract. This was on late Friday night that we had. Palantir was awarded an $8 million contract for commercial AI mission control software and integration services in the support of the 7th Air Force and 607th Air Operations Command. This contract provides for commercial software to accelerate combined dynamic targeting processes by providing software tools that introduce automating to existing workflows. Work will be performed primarily in South Korea and is expected to be completed in August 8th, 2025. So, boom. Another $8 million contract. Along with that $8 million contract, we actually got another deal in South Korea. So here was something posted on Friday as well. So Palantir partnered with LIG Next One, which is a leading South Korean defense contractor, in which they are going to develop advanced weapon systems leveraging big data. Palantir and LIG-1 next signed a memorandum of understanding to power systems, including unmanned surface vehicles. We saw them do this with Hyundai Heavy Industries as well. Small synthetic aperture radar satellites, mine clearance, and electromagnetic spectrum operations. Palantir already got a government contract for, I think, about $17 million 7 months ago around electromagnetic warfare as well. And this was posted from the South Korean Times. So you're just seeing, I mean, this is again why I think the dip gets bought up. We got a Wendy's deal on Tuesday last week. You get a Microsoft deal on Wednesday. You get an Air Force contract on Friday. And then you get again on Friday, a South Korean defense contractor developing a relationship with Palantir. Like, one of the other bull cases on Palantir that I've been thinking about is that the defense business is big in the United States, but if South Korea, if Germany, if France, if all of our allies want to start enhancing their defense capabilities, they're going to need to go through defense contractors to continue to build up, NVIDIA now above over 5%, their own defense industry. A lot of these companies don't have a massive defense industry because they haven't invested the time and resources to incentivize the Lockheed Martin of South Korea to become the Lockheed Martin of South Korea. And if you're going to get Palantir stepping in and providing the software platforms for a lot of those defense contractors to actually enable increased defense growth in those nations, I think it's like FedStart, which is Palantir's platform in the United States for small defense startups, on steroids, because now you have them all over the world. And I think that is just like another reason to get excited to go long Palantir over the next decade. Palantir now falling 29.79, so it's down almost 1%. So we topped out at 31.29 or 31.20. We'll see where it goes later throughout the day, but 29.80 kind of makes sense. It's taking a break. I mean, like you would expect to see some sell side pressure. We'll see if it goes any lower from here, but right now at 29.75 on the day. Robinhood 18.46, up 3% on the day. S&P is green, 534. The NASDAQ 452. NVIDIA, star of the show. Look at that, 5.5%. I don't know what's got NVIDIA excited, but NVIDIA is excited today. Jason says, I switched to Robinhood last week, still waiting for the transfer. I'm waiting for the Iran-Israel conflict to buy more Palantir. I like the margin rate and the after-hour trading. Yeah, that's another thing about Robinhood. I mean, they lowered the margin rates, the industry lowest, and dude, they increased their margin book by $1 billion. They went from $4 billion to $5 billion on margin book, on margin lending. So think about when interest rates come down, that hurts Robinhood's net interest revenues, but more people are going to take out margin because they're going to want to buy equities because, you know, stocks are going to go up, or in general, equities will tend to do better in a lower rate environment. So you're going to have more people take out margin. So margin interest is another area they can maximize on. Like, I just think there's a lot of ways they can navigate this in an exciting way. I'll show this a little bit later in the show, but I found a analyst on Robinhood called Wolfe Research. Or from Wolfe Research. I knew about their price target, but I found a video they did on Yahoo, and I didn't even know they did this interview. It's a good 5-minute video where they give you the bull case without the cyclicality of Robinhood, meaning they're going long without like caring about crypto. And I really like the analysts that are bullish on Robinhood without caring about the cyclical parts of the business, because that's how you know you have a real business. NVIDIA now up almost 6%. That doesn't need Bitcoin to go to 100,000 to appreciate in stock price. And so we'll watch that video in a bit, but he broke down the thesis very easily. And there was an easier way to understand why Robinhood can be a long play, even if you don't, go long just because it's a crypto proxy. Palantir 29.86, SMCI. Wow, SMCI up almost 9% on the day, following NVIDIA. Goodness gracious. That means Dell, I bet Dell's up like 3%. Dell, 2.06%. Okay, so Dell's up, Uber's up. ARM is probably up on the NVIDIA, going up. ARM 120, they're up 3%. NVIDIA really, really showing momentum this morning. Really showing momentum. Folks are buying the dip on NVIDIA earnings in 2 weeks, and we all feel they will crush it. I will sell the day before because folks will take profits and it'll be a dip again. Well, after the NVIDIA's, after NVIDIA on the last earnings, they went up. I mean, let's look at the chart right here. After, I think it was May. Yeah, this was the earnings right here. This was the earnings. On May 22nd, it was at 93. By May 30th, so 8 days later, it was at 115. So it broke out really nicely, dipped a little bit back to 106, then it broke out to 140. So after earnings, we saw a jump from 93 to $140. I don't know if we get that big of a jump again, but if we can at least get back to 140 and kind of like stabilize from 125 to 140, I think that would get people really excited. I think that would take the S&P up. That would take the NASDAQ up. That would get, the market still excited about big tech. So even if we hold 115, I think the market would at least be happy because, you got people saying NVIDIA is going to $70, $85 by the end of the year. But if they increase their growth estimates for Q3, maybe that doesn't end up happening. And that is definitely something I think the street is going to care a lot about. SMCI massive short covering going on, probably. Oh, by the way, so Palantir short update. The shorts are scared of Palantir, dude. The shorts are scared. Let me know any stock you guys want to get the short update on. I will search it up right now in front of you. But Palantir short update, you can see right here. 3% of the float, dude. It's down 21%. I mean, the shorts are scared of Palantir, dude. To decrease the short float by 21% before earnings, because this is as of July 31st, they were scared. SoFi went down a little bit as well, but not that much. SoFi still shorted pretty aggressively. So it went down 2%, but still 17.9% of the float is still short. Robinhood actually went up in their short interest before earnings. And that actually makes sense to me. When the market collapsed, people probably thought, oh, we should go short Robinhood because Robinhood's like a call in the market. So Robinhood went up 11%, still only 6% of the float. So not really a large amount, but 33 million shares are sold short. If Robinhood gaps up to 21 or 22, I think this is going to get covered as well. And so you'll see some downside on their short float. NVIDIA short float. I think NVIDIA has always been low. NVIDIA, yeah, it's 1% of the float. Not a lot of people are messing with NVIDIA. I remember in 2022, this thing was like 25% of the float, and some shorts lost their livelihood going short NVIDIA. But it's been, it's been changed since then. Intel, let's look at Intel short. Intel short is 2% of the float. Maybe that changes after earnings because this is as of July 31st. So maybe after earnings that goes up a little bit more. But right now that one is still down. SMCI is up because of NVIDIA, for those that are wondering. SMCI is up because of NVIDIA. And then Carvana, let's actually look at that one. They had a decent earnings. They're up like still 100% year to date. Carvana, says CVNA. Their short float is 13%. So they're it's down 20%, but still short 13% of the float. NVIDIA 5.5. Celsius, let me look at Celsius real quick. Let's look at Celsius. Celsius short float is 11%. So that's down 7% in the past 2 weeks, but it's still 11% of their float. NVIDIA at 110. Yeah, market's going green. So Palantir is struggling right here at 29.80, but markets overall are going green. Robinhood 1849 up 3.15% on the day. HIMS 1653, that's up. Meta going down a bit, 514. Snowflake 123. They have earnings the same day as NVIDIA, so we'll see what happens with Snowflake then. Reddit at 52. Bumble down another 10%. Bumble got crushed on earnings, so they're down. Carnival Cruise is down 1460. Down 1.18%. So cruise lines taking a little bit of a hit. Grindr, they had good earnings, man. 27% year over year, raised their guidance. Still don't have a position in Grindr, but they had a good earnings. They had a decent earnings. They did not have a bad earnings. CrowdStrike is down a little bit. Meet Kevin still majority cash. So I'm going to be curious when he gets back into the market. I still think he feels there's going to be a horrible recession coming up, and he's not fully in the clear yet on this recession. JP Morgan is up right now, so it'll be interesting to see if he decides to switch. KRE is up a little bit. TFC, regional banks should be up. Yep, TFC is up. And then you got NVIDIA right here at 5.2, Palantir at 29.75. Let's look at the other SaaS names on the day. Wow, all of SaaS went red. That's why Palantir is probably red as well. Intuit is barely up. Twilio's down, CrowdStrike's down, ServiceNow's down, Adobe's down, MongoDB is down, Salesforce is down, Palantir's down, Datadog's down, Snowflake's down, Confluent's down. Interesting. I wonder what the market's trying to tell us with all of SaaS being down today. Very interesting. Adobe down as well. Now they're down slightly, but they are still down today. That's probably why Palantir turned red. It was going to be hard for it to keep up if all of SaaS is down. Marathon is down. Yeah, the Bitcoin miners are down as well. Let me check the short float on CrowdStrike. We haven't looked at CrowdStrike in a second. CrowdStrike short float is only 3%. No, that's not too bad. That's not too bad. 3% is not crazy. I would think it would be much more. William, thank you for the $5 super chat. Amid is always long in grinder, never short. Love the channel. Thank you, William. I appreciate that. I still don't have a grinder position, guys. I would tell you if I bought shares, but I really don't like the valuation. And I saw, I'm saying the growth was good, but the growth was not that good to justify a $2 billion market cap. Like the growth was good, but it's not like 50% growth. I mean, 27% growth. Yeah, that's good growth. Maybe I'm being over analytical on it. And, Grindr is having appropriate growth for the valuation. I just like $9 is what I'm being really stubborn about. And if I don't get it, I don't get it. It's okay. But that's why I was hoping on the Monday crash. It went to 1085 on the Monday crash. I was like, dude, just get that sucker to $9. Like, let's let a real crash happen. But it didn't end up happening. But now here's the thing, right? What I'm saying, I want $9 on Grindr. Some people probably want 22 on Palantir. When the growth reaccelerates, it's hard for the stock to necessarily go down, because even though it's quote unquote overvalued, if the growth is only going to the right, to the up and to the right, then you kind of have a lot of buyers asking themselves, why would I not buy more? And you have sellers asking, why would I sell if I know they're going to have even better growth? And that's what's happening with Nvidia. The growth is still going up and to the right, even though they're growing at 200% year over year. And so if the growth is still accelerating and the guidance is only going to accelerate for Q3, you got a lot of people asking, well, why should I sell my Nvidia even if I'm up, 300-400%, 3,000-4,000% for some people? And I think that same story is going to happen with Palantir. That's why Robinhood is a gift. Yeah, I agree. I mean, like Robinhood is, if we know the growth is accelerating, that's why to me it gets very exciting, because it's not really going backwards, and there's no intention for them to go backwards either. IWM still struggling. Small caps not really finding any momentum. All right, so here's the question for the chat. And then we'll watch that Robinhood video I was telling you guys about that analyst. Here's the question. Do we still believe Tom Lee's thesis is in check? And specifically, do we think 300 on the S&P, or not the S&P, the IWM is happening? Let's do a poll on that. So let's end the jobless claims poll. Most of you felt the jobless claims were not real, 52% of you. Let's see, IWM to 300. By the end of the year. I didn't type in by the end of the year, but the poll insinuates by the end of the year. That is my question. Because, I mean, dude, he said by the end of the summer. The summer ends September 21st. That's, I think, the official end of summer. So I don't know if at the end of summer we're going to get 300 on the IWM. But I do think we get a greater IWM. I just don't know if it's 300. Small caps pump when rates cut. So here's the question. Do small caps pump so dramatically when rates get cut to the point where, you push up 40% on the index? Like that's the part that's just hard to believe right now. Like really hard to believe. But if it does happen, then he's a legend, dude. He's an absolute legend if that plays out. Buffett increased his cash pile. I believe Buffett over Tom Lee. Yeah, I mean, look, I understand that argument. I think Buffett in general is very opportunistic, and he was sitting on massive gains on Bank of America, and so he took profits. Bank of America was at 43 when he sold. Apple, massive gains. Now, I still think the jury is out on why he sold Apple, dude. Like 50% of your position getting reduced. Either you think 2025 shit's going to hit the fan, or you think Apple's ridiculously overvalued, or you think the iPhone sales aren't going to be as good, therefore you want to take profits, or in general, you're just doing risk mitigation and you're protecting the 50% of your portfolio that was exposed to Apple. And, any of those scenarios could be the case. I know a lot of the bears think, well, he's preparing for a massive recession. That I understand that perspective when you raise that much cash. But I also just think he thinks Apple is like not growing anymore. And this new iPhone hopefully is going to reaccelerate the growth. If it doesn't, then, maybe that's why Buffett is hedging his bets a little bit and taking some profits, especially given he's been long by like 10 years. Or he's been long for 10 years. Okay, what does the poll say? The poll says yes. Wow, so 52% of you still think IWM to 300. All right. So still a decent amount of people that are bullish on small caps. John says, sorry I'm late. I was at my Australian breakdancing class. I love that you were late because you were at a breakdancing class in Australia. You guys know I did breakdancing when I was in 5th grade. I signed up for a breakdancing class. This was after Michael Jackson died, and I wanted to be like the next Michael Jackson. And I was like, Mom, I need to join a dance class. And so What was it called? It was called Susie's Dance Studio in Jersey. Susie, well, I forgot the name of it. I know it started with a Susie, and I performed in their like end of the year recital or whatever. Like I wanted to be a dancer. I was inspired. So I like that you were late because you were at a breakdancing class. Okay, so let's look at Wolfe Research and their thoughts on Robinhood. Here's 5 minutes of what they think. Again, their argument is Robinhood outperforms outside of the cyclical part of their business, which is why I think their research is pretty strong. Let's hear from them, and then we'll go from there.
Upgrading Robinhood to outperform and boosting its price target to $29 a share. And joining us now is Steven Chubak, Wolfe Research Managing Director. Steven, it's good to see you. So it sounds, Steven, like you hosted a dinner with the company's CFO. You must have liked what you heard, Steven. You go to outperform on the name, targets 29. How come, Steven? Let's talk big picture. Why do you think this is a name to buy here?
Wait, the breakdancing thing was a joke because of the Olympics? Dude, I don't know anything. I like legit. I don't know how to say oculate. I don't know how to say pick up the door. I don't know about breakdancing Olympic memes. I don't know anything. I don't know. I'm sorry, guys. I don't know anything. I don't.
Yeah. Well, first off, thanks for having me on the show. Look, I want to give some different perspective because Robinhood is predominantly covered by fintech analysts. I'm actually a financials and banks analyst by trade. But really what's underpinning our thesis, what we're looking for is durable earnings growth, upside to GAAP earnings. So forget the non-GAAP adjustments, underappreciated growth levers and a reasonable valuation. And so we came away from the dinner, quite constructive, just given there's a lot of growth runway ahead for this company. As we started to underwrite some of the levers that they could pull, on the crypto side, active trader, expanding internationally, our estimates shook out 70% above the street, 70.
Wow. And
so it's very rare that we see that mind the gap, so to speak, or that upside relative to street numbers, where effectively the analyst community is not modeling any growth over the next 2 years. So definitely a lot of room for them to surprise positively.
Yes. Stephen, what do you think they're missing? What do you think the street's not seeing when it comes to Robinhood here? What are some of those growth levers that you would zero in on?
Well, I think the most important component is actually expenses. So there is a tendency to focus on a lot of the brokerage metrics. But what's really going to drive the earnings growth from here is the fact that they have a highly leverageable expense base, where our expectation is that 90% of their expenses are fixed. They are going to see 75% incremental margins. So for every additional dollar of revenue, you're going to have 75 cents of that dollar fall to the bottom line. And it's that operating leverage that people are not adequately reflecting in numbers. And that's really the biggest source of upside. But even in terms of revenue momentum.
So as we're playing this, guys, Bank of America just upgraded Robinhood to $32. Oh boy, that's why it's up right now as well. Wow. Another upgrade from Bank of America, Craig Senenthaler, from 28 to 32. Oh my. So first of all, Bank of America had a $24 price target. Apparently, I missed this somehow. He upgraded them to 28 last quarter. He had a double upgrade, and then he upgraded them to 32 today. I'm going to see if I can confirm this, but if that's the case, then yeah, you got two upgrades in one day, one to $23 from Piper Sandler, and then another one from Bank of America, if this is correct, to 32. So that's also why it's doing well right now.
They're growing organically at 20%. They're growing accounts at 5%, and that supports 20% revenue growth roughly. So as you start to think about that earnings growth algorithm, they're going to grow earnings at 30% annually, and the street is not reflecting any growth over the next 2 years.
You look though at this chart here, Steven. I mean, what a move already, right? I mean, the stock's up about 75% this year. It's up about 130% over the last.
This was before the pullback.
12 months. I mean, how does valuation look to you at these levels?
Yeah, it's a good question. I'm glad that you asked, because I think it's important to really parse what's driven some of the outperformance over, and let's just use the year-to-date number of 74%. It's exclusively driven by estimate revisions. There has been no multiple expansion for this company. I cover 28 names. There are only 2 that have actually seen multiple contraction, and Robinhood has seen no multiple expansion despite 74% gains in the stock price. And so that's a really key differentiator. It's all been driven by improving fundamentals. It's not a function of a higher multiple. And so it's a much higher quality source of price strength that I don't think is adequately contemplated by most folks. And so for us, so long as estimates continue to get revised higher, this stock is going to continue to rally. And that's really what the data is showing us. The stock price is 91% correlated to estimate revisions, and we expect that estimates are going to be revised 70% higher by 2026.
One funny little part of your note, I have to say, Stephen, was when you said what this upgrade is not. You said it's not a bullish view on crypto price appreciation, meme resurgence, or anything roaring kitty.
This is the part I really like about this analyst, because he's saying, hey, Robinhood can do very well without roaring kitty and Bitcoin, which is very, very important to understand, like, can you go long on this company?
So their growth, those estimates are not contingent on sort of these various zeitgeisty things that come into the market.
That's exactly right. For us, it was really important that we could identify drivers that are durable and sustainable to drive that growth. The fact that there's going to be an occasional meme frenzy, or we're going to go through a crypto winter, we're really trying to normalize for all those factors. So normalizing for activity rates, normalizing for account growth, normalizing for organic growth. What does that mean in terms of earnings growth potential? And again, it supports an algorithm that leaves our estimates 70% higher than where consensus is today. And so long as those estimates get revised higher again, this stock is going to continue to outperform. There's been a lot of noise on the regulatory front. There's been a lot of noise on the retail front with Wall Street Bets and the like, and roaring kitty. That's all noise to us. That did not factor into our thinking at all here.
Stephen, thanks so much. Interesting stuff. Good to get your insight.
So I really appreciated that as well, because my big bear case on Hood has always been, well, what about the cyclical nature of the business? And the more I learned about it, and they were asked about this on the earnings call, the CFO, which, by the way, I did see the CFO do like a keynote from like 5 years ago. This guy was the chief of staff to the CFO at Amazon. So Jason Warnick, I started learning a lot more about him because I wanted to know, hey, is this guy like legit with the numbers? Like, if we get a rate cut, does he understand the dynamics? Does he understand what levers to pull? Does he know what happens if crypto volumes tank over the next couple months? And I got a lot of confidence knowing his background in terms of what he did at Amazon, given his role now at Robinhood. And on the earnings call, he said they have 8 different businesses doing $100 million in annual recurring revenue. Robinhood right here, 1875, up 4.63% of the day. And so because they have all these businesses that are diversified from just trading, that is giving me more confidence that even if we get into a bear market, yes, Robinhood will suffer, but it's not like the stock just like nukes itself like it did back in 2022. I think a lot of businesses weren't prepared to deal with the 2022 like event. And now Robinhood is becoming more just like they know how to diversify enough to build out revenue streams besides that. So I think that's the exciting part about it. And that also helps you go very long on a company that's disrupting the financial services world and doesn't just need Bitcoin to go up. So that's what you got in the context of Robinhood. Palantir, 2966, still struggling a bit. Again, I think shareholders, we can't get too greedy. High 29s is still awesome. We'll see if we get back to 30. But now that we got to 30, I think we're likely going to get back. But 29.60 right now on Palantir. Nvidia now taking a little bit of a break, 4.65% up. It was up almost 6% at 109. QQQ at 453. S&P at 534. SMCI up 8% still. Tesla down 1.54% on the day. Bitcoin back over 60. Yeah, Bitcoin is back. Oh, yeah, there you go. 2.96%. That definitely helps. Bitcoin there. So the Piper Sandler one I found, the Bank of America one I have not found the official article yet. I see it's on StockTwits. Someone said Bank of America upgraded them. I'm still waiting for the official upgrade. Piper Sandler is definitely official. I saw that on the website. Bank of America, it makes sense here it is. So this is the headline. This is from MT Newswires. Bank of America adjusts price target on Robinhood to 32 from 28. Here's another one. Capital IQ got an outperform rate. This is their average outperform target, a price target range from 17 to 32. Here's the thing about MT Newswires. This is the same Newswire that had the Palantir price target to $6 or something. So I just want to get double confirmation because this same Newswire messed up. They meant to say a different company that starts with P, but they ended up saying Palantir. And that actually tanked Palantir that day. It went down 5%. So I'm always a little skeptical when I see their Newswire because they made some mistakes in the past. But if this is correct, then there you go. That's Bank of America upgrading it from 32 to 32 from 28. I thought the price target was 24. I didn't even know they upgraded it to 28. So I need to get double confirmation that that is actually true. And Piper Sandler, I know for a fact is true. So if that's true, then boom, Bank of America, $32. That's a hell of a price target. And Piper Sandler at 23, that's also really strong as well. Celsius up a little bit. Salesforce down 1%. Elf down 7% on the day. Hims up 2%. Palantir 29.64. Isn't MT Newswire open to lawsuits if they tank a stock on the wrong information? Yes. It's just a question of, do people actually want to go through the class action regulatory proceedings to like actually sue them? So, but yes, I think all of these news companies, when you're that like official, like Bloomberg, all these guys, they're subject to lawsuits if they mess up. It could also just be a genuine mistake. They spelt like some company that starts with P wrong and they ended up saying Palantir. I don't know how you do that, but they said they spelt it wrong. And so it was a whole different stock. But that actually took Palantir down 5%, dude. Like when it got tanked, it got downgraded to $6. A lot of people were like, okay, I got to sell this because it's going down the drain. That was a great buying opportunity. I think that was back in May that happened, or like June. But it ended up just being a mistake. TFC 4172, Bitcoin 60,200, Nvidia 110, still up 5% on the day. What else? What other news do we have today? Let's see. Let's look at this. So earnings growth of S&P 500 companies. Let's take a look at this. The earnings and revenue growth so far with 455 S&P 500 companies having reported. Okay, so 455 companies reported in the S&P. Earnings growth, you see utilities and technology leading the way, which is good. Materials is down. And then Q2 2024, energies and technologies leading year-over-year growth as well. This has not been a bad earnings cycle, dude. This has not been a bad earnings cycle, especially of the S&P 500 companies. Almost 50% of them have beat on top and bottom line. And I think like 65% of them is the last stat I was looking at. They beat on the top line on revenue. They missed on the bottom line. So it's not like it's been a hard earnings cycle. It's just for big tech, they didn't like put up the numbers that the street really wanted in terms of Azure and in terms of Amazon with advertising. But overall, it's not like big tech has done horrible, and it's definitely not like S&P 500 companies have done bad. And so if that Q3 consumer narrative thing doesn't hold up, which I hope it doesn't, then maybe you're going to see a lot more momentum as well as we get rate cuts. All right, let's get an update from CNBC, and then we'll keep going from there.
The consumer and inflation, we'll get PPI, wholesale inflation, tomorrow, and then CPI on Wednesday on the consumer. And then after all the volatility last week, our next guest says to buy stocks, but not the stock market, noting the pullback in communication services as an attractive entry point. Wells Fargo Securities Head of Equity Strategy, Chris Harvey, joins us now. What specific advice are you giving your clients as we begin the week?
What specific advice is be concerned, but don't be fearful, right? There's opportunity to open up. We could have some reverberations from what happened last week. Typically, when you enter a Fed easing cycle, it is more of a risk off, but there is opportunity there. So where it is, take it. And we're seeing good opportunity in the communication space. You did see a correction. You have good valuations, good fundamentals, you have positive momentum, and I think you can make money between here and year end in those space and in a lot of those names.
Why communication in particular? Because there were a lot of sectors beat up.
Yeah, it's a sector we've been riding for probably a year and a half, 2 years, sector we really liked. If you look at the underlying fundamentals, those fundamentals have continued to improve, but more importantly, it has good valuation, right? You're not paying through the nose for a lot of the valuations, and that's something we really like, more of a good, what you would call risk reward.
What about momentum? I know you've written about that as well, sort of bent but didn't break.
Yep.
I mean, how important does that continue to be in terms of this marketplace?
I think it's really important. One of the things we talk about is this feels like 1998, right? And similar situation where you had positive momentum, you had big caps outperforming small caps, Fed started to cut rates, and you did have a period of turmoil, but after that you did see growth, you did see momentum really get on its horse and start to move. So we do think it's very important. We do think that it's not time to go to that contrarian basket, to go to small caps, to be, very aggressive on that high risk trade. I think it's really about positive momentum, good risk reward, and things that are
So you
working.
weren't a believer in that rotation that we were talking about a few weeks back that obviously did whipsaw people who own the mega caps?
No, I think what we saw there was it was an exceptionally oversold type situation, just working itself out. If we look at the underlying fundamentals, they're just not strong enough at this point in time. I think a lot of people just don't trust the E. Yes, there's a big discount for small caps, but what is that E? And we're still seeing that E go down. And until we do, it's a very levered type situation.
Guys, we got nuked. We got nuked. That wasn't the Wi-Fi. I think that was just too many tabs open. I'm gonna go back to CNBC, but we absolutely got nuked. I should be back. Yeah, we're back. All right, let's go back to playing this. Sorry about that.
You did have a ton of leverage, and you worked out a lot of those over levered type situation, right? And you did see what we're saying is one of the reasons why you want to go back to communication, one of the reasons why you want to go back to momentum, it is on sale, right? Before it was very stretched, or a lot of these names are very stretched. Now it's on sale and you can get them at much better valuations.
Yeah, I mean, I've been watching the VIX late. We only watch the VIX when it's skyrockets. It went to 67 in early August. We're now below 20.
Yeah,
What does that tell you?
We look at the VIX, and I'm not really sure what happened on Monday, but the more important issue is liquidity, is credit getting to where it needs to go? And credit markets are functioning normally, right? IG credit or investment grade credit, there was more paper issued than expected last week. That's a very, very healthy sign. That's not something you saw back in 1998. And if we see the credit markets start to retract or start to dry up, then it's a problem. But right now, still pretty healthy.
All right, we'll go back to that. Dude, I don't even want an AI revolution. I just want a computer that can handle 50 tabs being open. As Swagnor says right there, too many tabs should not be a problem for new MacBooks. This is a December $2,500 MacBook. It was like 40 tabs? Is that too many, bro? Is that really too many? Like, I don't need AI. Just give me a computer that can handle 40 tabs. Like, we're in 2024. Is it really like I opened up one new website and then boom, the whole thing starts freezing and spazzing out? Like, that's not cool, bro. Like, come on. How much RAM does it have? I don't think it has the highest level of RAM, but I think it has a decent amount of RAM. That's annoying, bro. Like, why are you? You're a $2,500 laptop. Why are you fucking getting nuked? We haven't had Wi-Fi issues in 3 months. Remember in like January, February, the Wi-Fi was spazzing out badly. Like, I don't know what I did with my Wi-Fi, but I fixed it up, and we have not had Wi-Fi issues for almost 2 months. Like, we have not had any issues with like it randomly freezes up or the Wi-Fi quality goes down. But I guess the tabs was just too much. ARM at 119, Robin at 1869, Palantir, we are at 2965, so still not able to hold 30 on Palantir. Mark says I have 100 tabs open on my PC. See, that's the thing. Like, why is my Mac not able to handle 40 tabs? It's articles, dude. It's business stuff. It's not the other types of websites you guys are thinking of. Like, I have 3 browsers open with 10 to 15 tabs in each, but you're on video. Yeah, maybe too many. See, I had the same. I had 3 browsers like with various tabs open on each of them. But I guess because I was streaming video, that's what also hurt it. What could you possibly need 40 tabs for? Dude, there's a lot of news. I'm looking at like a lot of websites, a lot of charts that are open. Like, I have tons of things just open. But that's annoying. That's very annoying. Regardless, what he was saying right there is buy the stock market, or buy stocks, don't buy the stock market. Essentially pointing, the analysis he was making is that, hey, there's individual stocks that will outperform. The broader market might not outperform, and that's just because of the nature of volatility that we are currently in, and given the markets have already done so well throughout the year. So if we don't get that type of same outperformance, then you need to be a very picky stock picker, and that stock and picking stocks again requires a bit of skill in terms of realizing where the opportunity, where the alpha is. That's why Tom Lee's so bullish on small caps, because he thinks there's the alpha. But we're gonna have to see if the rate cut actually creates that alpha. But yeah, Macs need much better, maybe my Mac needs better RAM. How come Robin is rallying today? We had price target upgrades. Price target upgrades today is helping it, and it got a bit sold off last week. So I think those price target upgrades are helping. Chamu says, I have my MacBook for personal, but dedicated PC for gaming and streaming with an NVIDIA GPU. You need a dedicated PC so this doesn't happen again. Yeah, that's more than I'm thinking as well. I'm thinking maybe we need to get a dedicated PC for streaming, because I love the Mac and it's super fast, but those situations are very annoying, dude. We can't have that shit happen. So we might have to switch things out for that. Dell is up 4%, folks. NVIDIA is still up 4%. S&P at 535, and then KRE at 52.96 on the day. The Palantir merch store is launching again on August 15th. Some of you guys are commenting on this. I don't know if this particular jacket is going to be on the store, but they're having a bunch of stuff launch this Thursday. I'm going to be buying a bunch of stuff from it. They're going to have t-shirts and all this stuff, all made in America, cool stuff. So this Thursday, definitely going to be looking out for that. What do you think about Coinbase? I like Coinbase, but the problem, and I've been pretty consistent about this for a while, Coinbase at $50 or $35 February 2023 was a buy. Now it's at $200. And the only way Coinbase gets massive momentum is if Bitcoin finally breaks out of that 70,000 channel that it's been stuck in, or 60 to 70,000. I like Robinhood more than Coinbase because it's not up 7x from the lows, and Robinhood is more diversified from crypto. So for someone asking in the chat, do you think Robinhood's a buy right now? Yes. The answer to me is yes. I like Robinhood right here. I don't like Coinbase here because it's contingent upon Bitcoin. Like, if Bitcoin doesn't move to 65,000, Coinbase just stays stuck in the 190s to 230s. But the premiums on Coinbase are great if you're selling puts. The premiums are amazing because obviously the Bitcoin creates a lot of volatility. So if you sell puts on Coinbase or calls, if you're okay with getting assigned shares because you're generally long Coinbase because you're generally long Bitcoin, then the premiums are fantastic. Like I know I was talking to a guy who makes 7% a month trading premiums on Coinbase. So now granted, you might have to have a lot of money to DCA because Coinbase is very volatile given Bitcoin, but premiums are fantastic. So that is where I get excited about Coinbase. But if you're not trading it on premiums and just going long, then you kind of just have to hope Bitcoin outperforms. S&P 535, QQQ at 453. Palantir still stuck in the high 29s, 29.69 on the day. Let's see if Palantir adds the Carp white shirt. Dude, I think that would be so funny if they had a white shirt that's tight just for like a Carp branded aesthetic. That would be very fun. That would be very, very fun. If he's streaming and opening 40 plus tabs, dude is going to need at least a $2,300 PC. Well, the thing is, this MacBook is $2,500. So, like, you would think this MacBook can handle that. But I guess we're going to have to get another PC that can handle it better. Or maybe I just don't have that many tabs open. That's another easy solution. It's just sometimes you need a lot of stuff open as you're going through stuff. All right, let's get back to CNBC and then we'll look at some other stories.
All right. Well, thanks for going through some of those metrics that you're talking about with clients and PMs. Chris Harvey from Wells Fargo Securities. Check out shares of KeyCorp, biggest gainer right now on the S&P 500 after news that the Bank of Nova Scotia is acquiring a near 15% stake in the company worth around $2.8 billion. The CEO of KeyCorp will join us next hour, Money Movers, 11 a.m. Eastern, on what's an interesting deal. And we're wondering how that partnership is going to shake out. I'm looking at some of the early analyst notes, kind of a surprise. They considered it a self-help story, and now this is interesting.
It is. No, it's a significant allocation of cash. They're doing it at a premium, so they're paying $17.17. They're doing it in two stages, going up to 4.9 and then ultimately to the 14.9. That is $2.8 billion in new capital that's going to be available as well, and they're going to partner potentially on certain growth aspects. Again, we're going to have an opportunity to talk to the CEO and find out exactly what was behind the decision to do this.
You wonder if a bigger deal is ahead as well, bigger than other consumer names.
I've been following it in part because of Elliott is the activist. There were reports as well that Starboard's there. Unclear to me exactly if anything's going to develop for that one. But Elliott, we have been focused on, of course, whether or not there would be an opportunity for them to get at least one director. I've been hearing the guy who runs activism at Elliott's name, Jesse Cohn. But again, we'll see whether we get the actual settlement of some kind there in the near term or not. But that seems where I've been focused, at least. I know these headlines on Starboard also may have misdirected people a bit, but what I've been able to tell, not much there to say at this point.
Well, Starboard's not confirming anything. They're not saying anything. It's on brand, though, if you look at some of what Starboard's done, especially with consumer names like a Darden restaurant.
Yeah, much more so in some ways than Elliott.
But the question is, what is the issue here, right, with Starbucks? Because they have reported weaker traffic and sales than other consumer names, even in a tough inflationary environment. They have, a CEO in there who has made a deal with the unions, but it feels like they need to figure something out to get more traffic later in the day, not just in the morning.
Is that what it
That's
is?
That's one issue.
Price is also an issue as well.
Yeah.
Service, operational issues. Right?
And new customers, getting new customers in beyond just the loyalists for Starbucks. But the stock is getting a boost maybe on all this activist activity and interest.
The expectation of some kind of a settlement. Again, we'll see whether in fact we get that. But yeah, to your point, still stock down, 22, almost 23% for the last 12 months. Quick programming note from me. Tomorrow, don't miss it. We're going to interview.
All right, so Starbucks is one that I've been looking at as well a little bit more deeply. No position yet in Starbucks, but trying to see if Elliott's going to change anything. Starbucks up 3.69% on the day. Another stock Steve's been looking at that he's been texting me about? UPS. Now, UPS took a beating this month on earnings. They were at 157? No, they were at closing in here. Oh, no, actually they did go down. So they were at 145-ish July 18th. Now they're down at 123. And so that's what's getting Steve a little exciting. Price to sales of 1.2, dividend yield of 5.19%, market cap of $107 billion, and a decent amount of cash on the balance sheet. So UBS and Starbucks, two that we're looking at right now. Starbucks dividend yield of 2.92%. I think Starbucks has more headwinds than UPS. UPS is really facing a lot of competition from Amazon as well. That's starting to vertically integrate a lot of their deliveries, which is hurting them. Along with FedEx, that's just like a more better run business. But Starbucks, the Elliott management maneuver might be, and they had a pretty good earnings we saw a couple weeks ago, but not enough to get the stock back into like the 100s where it was at before. China exposure is still a risk. I do think Elliott has a history of changing companies for the better, so I would imagine they start to do a lot of things to reverse course. But I think the biggest thing they have to do is reduce the prices on the coffee, because the coffee is still too expensive, and I think that's the simplest thing that no one wants to do that they might have to do. For UPS, we're going to need to see a lot of different changes in terms of how they plan to compete with FedEx and Amazon. But it's one that's getting a little bit more exciting taking a look at, especially when you dive into the balance sheet. Dell is up almost 5.29%, trying to get to 100. SMCI, wow, 9.19%, 555. They're going to do a 10-for-1 split as well. So that split's going to help them. And then NVIDIA back up to almost 6%, 110 on the day. Is Amazon a buy right now? I think so. Amazon's down from 200. The only way I think Amazon craps the bed over like the next year is if AWS doesn't do well. And I just don't see AWS not doing well. If we believe the AI cloud story is only accelerating, which it should be. So besides the retail business, which is lagging a little bit, the advertising business, which took a little bit of a hit, AWS is why you buy Amazon. You get everything else for free, but you buy AWS. So yeah, I think Amazon's a buy. It's down from $200. I think it's sitting at the 200-day moving average now, and it's a lot more exciting at 168 than it was at 194. It bottomed at 151 over the past month, 150.89. And so that's, if anyone got it there, congrats, because that's the cheapest you got it pretty much in 5 months. But I think Amazon for the long term, it's hard to see. It's hard to see us going wrong on Amazon on the long term. It's really hard to see you going wrong on any of the Mag 7 for the long term, dude. Like the only one that I think could really go wrong, honestly, is Apple if the AI upgrade cycle doesn't happen. But I think that's happening. And so if I think that's happening, at least that's happening to an extent. Maybe it's not like 200 million devices. Maybe it's, 80 million devices. That's still going to be great for them. Then I don't think that's going to be the worst thing in the world. I think we had Dan Ives actually on today talking about Apple. Let me see if I can pull that up. I think he was live today. Let's see. He still remains bullish. He raises price target to 275. And so he still thinks Apple is not slowing down anytime soon. Yeah, here he is right here. So let me pull him up and let's get his take on where he thinks Apple is going.
Perform or have been so far for this month. Our next guest remains bullish on the sector, saying AI demand is strong and forecasting a renaissance of growth for Apple in particular. Wedbush, Dan Ives joins us now, ready to break it all down. Dan, where do we find you on this fine morning here in New York, but perhaps where you are, it may be a bit later.
Yeah, I'm in Tokyo right now, and look, as we've talked about on the program, I mean, when it comes to AI and it comes to checks, it's not going to be sitting in an office building, right? I mean, and I think what we're continuing to see gives us just further confidence that this AI revolution from semis to software is just beginning.
All right, so what is it you're continuing to see? And tell our viewers, you're in Tokyo. They're well acquainted with your channel checks, but I'd be curious to know what that actually means, A, what you actually do, and then what you're seeing that's giving you the confidence in this raised forecast in terms of how many iPhone 16 shipments there will be.
Bro, I don't think Dan Ives does anything when he goes to Asia other than party. I think he has a bunch of junior analysts that do all the checks, and I think he parties. He's just the guy to talk about what his analysts do. I think Dan Ives has got to the point where he's not doing the nitty gritty work, dude. He parties, in my opinion, when he goes to Asia, and his minions do all the work.
Yeah, and that's really across Asia in terms of suppliers, how we've always been able to really, I think, get a beat in terms of our view of the supply chain for iPhone. And this started off units coming out, we're calling it 80 to 84 million for iPhone 16. And now we're at we believe about 90 million and potentially higher. And that's important because that's essentially what Apple is telling suppliers in terms of what the demand outlook looks like on iPhone 16. And we continue to believe this is the start of an AI-driven super cycle for Apple.
China remains important. You're in the region. You're obviously not in that country right now, but does that extend to your so-called channel checks, Dan? Do you get a sense for demand there, given how important that would be overall for the iPhone 16?
Yeah, and that's a big part of what we're doing, and we'll be back in a few weeks in Asia. I think China is going to be key in terms of from a growth perspective. I mean, we believe there's 100 million iPhones in a window of an upgrade opportunity, and those are going to be 80-85% Pro and Pro Max. And what's important there is that's just going to further drive ASPs. In our opinion, we could now be looking at over 240 million units for Apple going 2025. And if that happens, despite all the white knuckles we've seen over the last week or two, I think we're looking at a $4 trillion market cap in a year.
The problem, Dan, is that what we learned from earnings is that these stocks and these companies are still very reliant on, advertising or macro factors. And Amazon was soft on e-commerce guide, and Google, YouTube was soft. And so I just wonder if there are dangers with the excitement and exuberance with AI, which is clearly the predominant trend with current revenue growth.
Look, no doubt. I mean, there was some soft around the edges that we saw with Amazon. We saw it on YouTube from an ad perspective. But then you look at what we believe is just this fourth industrial revolution that's getting built out. Look at Microsoft in terms of the Azure guidance. We look what we saw from cloud, from Google, from Amazon, from Microsoft. Look what we saw from Palantir, from a use case perspective. And I think ServiceNow also starting to see it. This is the start of just a massive, we believe, $1 trillion of CapEx over the coming years. And I'm not saying that it's necessarily going to be, there's going to be some speed bumps on the way in tech, but I believe this tech bull market is well underway, despite obviously some of the macro worries that we've seen over the last week. And that's how we're hand-holding investors through it.
All right. Well, continue those checks, but make sure to get some sleep. It's getting late over there. Dan, thank you.
Enjoy the yen at 148, which is stronger, but still.
I think it's really a question of if you believe him or not. I think it's really a question of if you believe him or not in the context of these checks being validated. Apple right here at 219, up almost 2% of the day. In the context of this iPhone upgrade cycle. Again, I'm still a little skeptical, dude, because I still don't know the massive use case, but I have an iPhone 15 Pro, so I will be able to get the benefits of this AI super cycle thing. I mean, I will be able to upgrade my phone because I have the latest tech for AI. So I'm going to be using Siri a lot more. I'm going to be experimenting with it every day and seeing if it's worth it. And if it really is worth it, then maybe that upgrade cycle becomes aggressive. The one bear case around this is if the consumer is nuked by the end of the year, they're not going to be buying a new iPhone, no matter how much AI you put into it. So one thing that has to hold up is the consumer not taking a nasty dive. Here's another stat on Palantir. Arnie posted this chart today, and this chart is great. Really exciting chart. Revenue per employee. Look at that. Palantir actually decreased employees last quarter, or I think they didn't hire. They did not increase their employees at all. Salesforce has an average revenue of $503,000 per employee. ServiceNow $464,000. Palantir $690,000, and about $180,000 of that is profit per employee. I mean, just talk about a lean, mean machine that is scaling aggressively and doing it in a tight knit way. You don't need hundreds of thousands of people. Snowflake has 7,000 employees. It's a lot. And Palantir has less than 4,000, which is good. So I think that's also contributing to some of the efficiency gains that the street is recognizing in the context of Palantir. All right, so Fox News is reporting Iran could attack Israel in less than 24 hours as Western powers are issuing a warning. Issues Tehran a warning. All right, so that's what Fox is saying. That is something, it's kind of weird that Bitcoin is up right now because you would think Bitcoin's down on a news like that. but Bitcoin's actually up 3%. So kind of weird. Usually any type of news like that hurts Bitcoin badly. Gold up right now? Let's see. Gold is up 1.2%. So definitely the gold markets are starting to price in. Maybe there's going to be a little bit of a issue today. But again, Iran was saying this all of last week. They didn't do anything. Maybe they end up doing something today. I hope they don't do anything. But if they end up doing something, then again, you're going to have to really ask yourselves, how bad is the attack? Can the Iron Dome control the attack? And then the United States already sent a ship last night into the Middle East to help with protecting Israel. I forgot the name of the ship, but it's one of their submarines that they sent in. So I think we're going to see a lot more of allies begin to send military equipment. It's just going to be a question of, is shit about to hit a fan? Are we about to go to a war? Which I don't think is the best thing for the markets at all. Some people have been asking me, hey, do you think Palantir is going to do well in a war? Just like, or in general, like when defense, when, you know, things get rough. Traditionally, when we have the start of any type of like geopolitical event, the market dips for like 2 days and then it goes back to normal. The market kind of overlooks it historically. If you look at what happened with Russia and Ukraine, that's just kind of how the market acts. In general, I don't know if Palantir benefits as much as this guy, Lockheed Martin, which is up almost 1% of the day. Palantir is still selling software. They're not actually making the missiles and the guns and the tanks and all that stuff. So unless the software for Palantir is in higher demand, if a war between Iran and Israel breaks out, which I think Israel will use Palantir software, I don't know if it's going to be so much higher demand to the point where, you know, you're talking about hundreds of millions of dollars like Lockheed Martin or Raytheon would get. I don't know if it's like a direct tailwind for Palantir. Maybe perceptually defense stocks will do well and Palantir catches a bid from that. But I don't know if it dramatically increases just because we get into a wartime period. But we're going to see. Titan, well, Titan, we already got paid for that, remember? We got paid $189 million for that. So, and that was a 2-year deal. So unless there's more demand for a product like Titan, which could happen, then that could help. But as of now, primarily, again, Palantir is selling software, and that would have to uptick in demand in order to see increased tailwinds. Tesla at 198, down 1%. It's really weird that Bitcoin's pumping, dude. That Fox headline, if that's accurate, that should have Bitcoin down 3%, not up 3%. That's really weird that Bitcoin's up on a potential attack by Iran. So that's actually very weird. But Lockheed Martin and Raytheon, I do think they'll do well if that happens. And, you know, it's one of the things, like, you got to be able to live with yourself if you own the Lockheed Martin and Raytheons in the world. I don't personally think there's like this horrible ethical confusion you should have. I mean, at the end of the day, they're providing a product or service, but, you know, there is an argument that it's just a little, you know, it's just a little icky owning those stocks during wartime. I don't judge anyone who owns those stocks, but I can understand the reasoning to not want to own those as not contributing to the military industrial complex. I think Palantir has the same kind of connotation. They're not literally making the weapons, but they're still making a ton of, you know, defense software that contributes to the war. So you kind of have to reconcile it yourself if you're owning those names. L3 Harris as well. Yep, L3 Harris. That's a big one. In general, I think Lockheed Martin and Raytheon, I don't like, they're up a lot over the past couple of years for me to think the risk reward is attractive on those just as stocks. Like Lockheed Martin over the past year is up 23%. Year to date, it's up 21%. Like, do I really think it's going up another 30%? Now, if we get into like World War III, yeah, but like, I don't think if World War III is happening, the least of our worries is stocks. Raytheon is up 37% year to date, and over the past year, it's up 35%. So I don't know if the risk reward, if there's like a small attack where you need more weapons, but you don't need like World War III types of weapons demand, is going to lead to a massive attack. But we will see. That's a headline out of Fox. We'll see if Iran's actually serious or not, and if that's gonna play out. Cool. So I think that's pretty much it for the news today. Here's one final thing. Let me ask you guys if you want to watch it. So Yahoo just posted the official 12-minute interview with Vlad from their talk with Robinhood. Let me know in the chat if we want to watch that or not. That'll end out the market close. If not, then we can end it out here. If yes, then we'll watch Vlad for 12 minutes, talk about Robinhood. If not, then we can we can end it here. But I think I watched the interview over the weekend, or I watched like 5 minutes of it. It was a pretty good interview, gave a lot of insights, but they just posted the full interview. So we can either watch that or not. I don't think there's any other headlines. I'm looking around. Markets are flat. Palantir struggling to maintain 30. Bitcoin's mooning. I mean, not mooning, but it's up 3% now. It was up 2%, so it's up another 1%. Palantir 29.85, trying to catch a little bit of a bid at 29.84, but not really getting to 30. Robinhood 18.60, up 3.8%. Apple 2.18. Bank of America 38.20. And then Nvidia, which is the leader today, up 5.4%. Nvidia having a good day. Yes. Okay. We want to watch it. All right. So we'll watch Vlad. We'll do word of the day after that, and then we'll be done for today. Then we'll be back at 3:45 for the market close. And after that at 8 p.m., I'll be live at 7:50, Trump and Elon. So today's still a jam-packed day. We have some earnings after the bell. And then we got Trump and Elon at 8 o'clock, which I have no idea what's going to happen there, but we will find out what they talk about later today. All right. Here's Vlad.
To a trending stock on the Yahoo Finance platform today, Robinhood. Shares rising on record high revenue, some attributing the rise to the run-up that we saw in crypto and meme stocks earlier this year. Here with some insight, we have Robinhood's CEO, Vlad Tenev. Vlad, great to speak with you and grab some time here. I mean, I imagine over the course of this week with the sell-off we had seen earlier, then your own earnings, you've probably oscillated from espresso shots to maybe just, ripping Celsius. I don't know, but I imagine it's been extremely busy for you. So thanks for taking the time. First and foremost, let's just start with what we've seen in the market activity more broadly. What goes through your mind as the CEO of a trading platform as large and as international as Robinhood when you do see activity like that?
The activity so far in August has been...
By the way, Trump just posted on X for the first time. He posted a campaign video. He posted for the first time in a year on Twitter just now.
Large. We announced these Q2 results yesterday. And in that earnings call, we talked about July volumes being 20% higher than June, which was the last month of the last quarter. And August has been more of the same. And August is typically a pretty quiet month for retail trading activity. And we haven't seen that this year. We've had $1 billion in net deposits in the first week of August. And the $13 billion we had in Q2 was a record high for us. Just Monday of this week, was about $500 million of net deposits into the platform in one day. And then 24-hour market, which Robinhood was a pioneer in, which offers overnight trading in over 1,000 US stocks, that was 3x normal volume on Sunday. So the things that go through my mind are making sure that the system is reliable and performant for customers. On Monday, the majority of the incumbent brokerage competitors were having issues. And those are opportunities for Robinhood to distinguish ourselves because of our technology and kind of position the product as a reliable platform for people when so many others are having issues. And I think customers should feel that they have advantages using Robinhood and they would be disadvantaged by using another platform, which I think you're starting to see with 24-hour market. We offer opportunities that you can't get at other brokerages, and also with reliability at the most important times.
Should investors be bracing for more volatility given what we've seen in the recent trading sessions here? We've had a little bit of a bounce back or an attempted bounce back, but is there, and I know that you used to be in high frequency trading back in the day, is there more that they should be bracing for?
Well, there's a lot of different types of market participants, right? Traders who typically are more advanced, and Robinhood had a slew of active trading products, including options trading and margin, equities and crypto. Those traders look at volatility as an opportunity because they have sophisticated strategies that they can employ when markets are going down and sideways. For the more buy and hold investors, typically they're saving for retirement and they have long-term time horizon.
Markets are dumping right now. Everything just took like a 1% haircut. If you look at the portfolio, everything's down. Palantir 29.39, Robinhood 18.44, S&P's down. So markets just took a hit.
horizons, they tend to look at opportunities like this to buy stock and accumulate at discounted prices. One of the things we've been seeing thus far in August is more buying than selling. And that's why we've been seeing so many deposits. Our customers generally have been seeing this as an opportunity to add to their positions.
You know, it's really interesting in some of the figures that you reported. I mean, at the same time that you've got Olympic athletes competing for gold, you've got your own gold subscribers as well right now that are continuing to show some strength for the company, reaching a new high of 2 million. I think that was up 61% year over year. Take us into how you're looking to really capitalize on some of the gold features and make sure that that is a direct pass through to some of the ARPU figure, that average revenue per user.
Yeah, I mean, what we're really seeing is the flywheel of Robinhood Gold spinning. As we have more and more gold subscribers, we offer our gold subscribers lower prices across all of the products that are in gold. And that leads to higher wallet share and increased multi-product adoption. One stat that I use is gold subscribers adopt retirement at 5x the rate of non-gold subscribers. And this leads to higher ARPU and increases our ability to lower prices further and leads to the diversified business you're seeing today. We now have 8 business lines that are generating 9 figures in annual revenue. So that's 8 business lines at over 100 million per year. Robinhood Gold subscription being one of them. And so, and we believe we can add more. We're going to continue to add more. And so the business is getting more diversified over time as we're growing each segment. And I think that really makes me optimistic about the opportunity and that we're just at the beginning of it.
And when you
Okay, so we'll get back to that in a second. In terms of the market, guys, I don't see the reason for why everything is down. It kind of just looks like some intraday volatility. We got to, S&P, you see right there, just went straight red from 535. So a couple of pieces of data I got. Number one, India's inflation came at a 5-year low. That's good. That's not bad. Oil is up a little bit, but that's okay because oil was heading below 70. So you needed some move to the upside. And then look at this. US 3-year inflation expectations fell to a series low of 2.3% in July. That's bullish. That's not bearish. That just came out 5 minutes ago. So now we're expecting, to get to headline inflation at 2.3%, which is a 3-year low. I mean, things are good. I don't know. I don't know where that nasty red turn. I probably was just some intraday volatility. Iran did not attack yet. There's no news on that. Bitcoin just got nuked as well. Bitcoin was at 60,700, literally at 10:45. Now it's at 59,603. It was at 60,200 at 11:25. At 11:28, it's down 800 points. So I don't know where that came from. Palantir just went 29.52, recovering a little bit. Fell to 29.30, now back at 29.50. But NVIDIA was up 5%. Now it's up 4%. You got a red candle right there. Algos sometimes take over, and in the middle of the day, you get dips that happen. And, we'll see if it gets bought up. But that did go. The entire market just took a little bit of a dip. All right, we'll get back to Vlad.
You talk about those segments. I mean, you also just recently went through 2 major acquisitions. In June, you mentioned Bitstamp, and then additionally, you had the acquisition for Pluto as well. That was more on the AI side. As you think about these acquisitions and how they help define the era that Robinhood is in right now, how would you define the era that this company is finding itself in and where growth is firing at perhaps the most popular cylinder for where you're seeing users come onto the platform?
Yeah, well, one of our analysts said yesterday, Robinhood is firing on all cylinders and adding more cylinders, which I rather liked. I think that was pretty clever. The era that really gave rise to Robinhood was mobile and cloud. Those are 2 big technological shifts that allowed us to carve out a niche in our business because nobody had been really paying attention to mobile. Most of our competitors, I mean, pretty much all the big ones are brick and mortar. They have stores. They rely on people rather than technology to expand. And I think that created the conditions for us to be successful by being a technology company and offering lower prices than our peers in financial services. Now there's another 2 technological shifts that are going to affect our space, and those are artificial intelligence and cryptocurrency. Both of those have the potential to completely reorganize how financial services are delivered to customers, both on an infrastructure level and the service level. And we're thinking about that every day and positioning Robinhood to be successful and a leader across both of these shifts.
Is there one that you would prefer Robinhood to be known at excelling at, the artificial intelligence side or the crypto side, as you had talked about a lot going into the public debut for this company?
Well, that's a tough question. It's like asking me which of my 2 children I find more beautiful. I think both are important and both are inevitable to a certain extent. So we don't have to choose. We already have, a very large cryptocurrency business. In retail market share, it's been growing, and it's kind of been a dark horse in the space. Not a lot of people think of Robinhood as a major player, but in retail crypto, we're right up there in market share, and we're continuing to grow. And then artificial intelligence, the financial services industry hasn't really embraced that. And I think it's incumbent on a technology company that started with that DNA of being technology first to make sure that the financial industry can navigate that transition successfully and safely. So I think both are important. It's hard to pick between one of those 2 technological shifts. It's kind of like asking, what's more important, mobile or cloud? They're both happening, so we have to make sure we're ready for it.
Certainly, we'll accept that. All right, I got to hustle to my finish here, Vlad. First, when you think about the softness in the IPO market, I mean, this is a feature that you had really worked on bringing to the platform users here. When you see softness in an IPO market, does that typically push some of the subscribers, some of the users over to just other crowded trades that are already happening?
It's a good question. I mean, I haven't really thought too much about the link between IPO investing and other trades. I would tell you that I do think it should be a little bit easier for companies to go public. I mean, if you look back in the 80s, companies like Apple and Microsoft went public at relatively low valuations. And what you're seeing now is companies, getting most of the value appreciation in private markets where they're only accessible to accredited investors. And I think that needs to be fixed. I think the cost and the burden of companies going public needs to go down, because it used to be that, if you get to 100 million in revenue, that was kind of the moment at which you were sort of public company ready. But now that number's gone much, much higher, and companies are staying private longer, and the appreciation is not seen by retail, which we think is a big problem.
And just lastly, while we have you here, Vlad, the name of the show is Wealth. And for a lot of our viewers out there, they're aspirational towards building their own wealth, being able to retain it, and ultimately get to a stature like you have as well. If you had a message to your younger self just about making sure that you were building a product that you could be proud of and that would help you amass but also retain wealth over time, what would that message be to your earlier self?
Yeah, well, now that I'm older and hopefully a little bit wiser, you can see the gray hairs on my beard. My message would be that I think we tend to overestimate what we can do in the time span of weeks and dramatically underestimate what we can do over a year or two. And I keep being surprised at this. So I think having that perspective, you can start long journeys and chip away at it systematically over a time period of many years. And it's really about figuring out what the smallest step that you can accomplish is, and just making sure you make progress every day. I think it's a lesson in life, but also in investing. I think we have a lot of impatience in how we approach things in business generally. And I think having the perspective and seeing a long time horizon and seeing that play out, I think that's one thing that you gain from just being around longer and having that wisdom. So if you can grok that, I think you're ahead of 95% of the people.
All right. Main takeaway from that is I thought his last message was accurate as well about just having a long-term horizon. But when he talked about AI and crypto, I thought that was the most insightful part of the interview, outside of the fact that $500 million of deposits happened on Monday, which is crazy. But it seems like they're innovating on AI and crypto. I think Bitstamps is going to be a massive acquisition for them that expands their crypto revenues internationally. And then I think their AI Pluto platform, I don't know when that's going to come out into a real Robinhood product, but probably by 2025, you're going to see some type of advisory from Robinhood, which is where a lot of these banks and these Wall Street firms make their money. They, like most people that get paid in investing, get paid for their research. And if you could create some type of advisory product that helps you do research, I would imagine that incentivizes people to be more attracted to use your service or to pay more for it. So I think both of those parts of innovation, Vlad thinks he's on the bleeding edge of. And if Robinhood innovates on those levels, maybe they continue to do well. The thing about Bitstamp is that they're acquiring 50 global international licenses to sell crypto. So it doesn't just have to be in the United States or the EU like they are currently. I don't know where the locations are, but like imagine it's in Japan. Bitstamps is one of the oldest crypto exchanges. Now Robinhood can offer Robinhood crypto trading, which is via Bitstamp, in Japan. And there's an institutional element of it, which is the part of the business that I think they're really excited about, which is onboarding other companies and hedge funds and firms onto adopting Bitcoin, kind of what Coinbase is doing, but at a smaller level, because Coinbase is doing it with the big ETFs. And so I think that's going to be a dramatic part of the business that's exciting. Another thing about Bitstamp is there's $3 billion of assets that Bitstamp owns. Robinhood is paying $200 million to acquire Bitstamp, the company, which means they're going to increase their AUC, their assets under custody, by $3 billion, and they're only paying $200 million for that. So if the revenue yield on their AUC is about 2%, you're going to get 2% off $3 billion added to the top line just because they acquire all those assets, and they're only paying $200 million for it, which is relatively cheap in my opinion. So I think that acquisition is actually going to go very well for them and expand them in the crypto universe. QQQ at 450, Dell at 96, ARM at 117, seeing a little bit of a reversal from the market going down that we just saw, that big red candle right there at 1130. So bit of a reversal happening. Palantir 2944, it was at 2930 on the lows, but still not making its way back to $30 yet. Bitstamp was also some of the cheapest trade commissions on crypto, especially high volume traders taking out competitors. Yeah. And they're an older platform. They're not as big anymore, but I think that's why they got them cheap. Yes, my portfolio is basically 50% Palantir, 50% Robinhood. That is what it's looking like right now. And we'll see. We're going to adjust. I want to get Tesla in there as well. I think I'm kind of thinking, dude, those are the three that I want to have for the next decade: Tesla, Palantir, and Robinhood. And the reason, maybe Palantir and Robinhood, I think Palantir is going to be a good pick. Maybe Robinhood, that's the more controversial one. But I just understand the company so much. And I'm like, if I'm going to go long on an individual stock, it has to be something I know so well. Like, I can tell you statistics about Palantir and Robinhood that most people in the world just don't know about, because I really study those companies. And so I feel like growth names, I study the companies, I've met both CEOs, I understand the culture. I think, at least for me, going long on those names is not crazy. And then Tesla's the one I know the least about. And I guess this, upcoming fall, I want to try studying more about Tesla, because I feel like I can give a bull case on Tesla, but it's not as good of a bull case as a lot of other people can. But I also think Tesla's going to be dead money for some time until FSD becomes real. Now, it's rebounded from 130 to 195, which is amazing. But until Robotaxi really starts to show momentum, it's not going to just magically go up into the trillions of dollars when it comes to market cap. But I think it has the most potential out of pretty much any company in the stock market. When you factor humanoid robots, FSD, and the broader AI revolution, I think Tesla's the obvious bet there. Tesla's too reliant on Elon. What happens if Elon moves on? I don't want my money betting on one person that can leave anytime to pursue something else. That's a fair point. That's a very fair point. I still think that if you're going to bet on someone, I know, some people don't like him, but I would bet on Elon. And I don't think he's leaving. I think he fought for this 25% control pay compensation package because he wanted to have autonomy over Tesla, and he needed the financials to support it, and now he got paid. So now I think he's more motivated than ever. Is he still distracted by politics and Neuralink and SpaceX? Yes, but I don't think that's a bear case. I think if anything, that only helps Tesla. I think XAI is going to be a beneficiary to Tesla. Like, I think Elon being distracted, the key man risk, like outside of Elon, something bad happening to him, if he stays healthy, I think Tesla survives. And I still think, look, the simple thesis on Tesla to me is if you believe AI is real, the only like 3 major use cases of AI are going to be LLMs in the enterprise, which I think Palantir wins, humanoid robots, which I think Tesla's probably going to win at, and then FSD, which Tesla's going to win at. The last one is like ChatGPT stuff, and maybe Apple wins that race because they bring it to the consumer mobile revolution. But besides that, there's only 3 use cases I see. It's robots, FSD, and then enterprise software. So I just don't feel like Tesla is one to avoid if they have 2 out of 3 of the biggest use cases. But I'm not in a super hurry to get a ton of Tesla because I think we'll have time to buy it until FSD starts to officially scale out. I do think, it's down from 270. I don't think 195 is a horrible buy. And I don't think it has to go back to 150 or anything, but I do think it might be a little stuck until the 1010 event. Now, if that 1010 event works out, I mean, maybe there's a path to 300 by the end of the year as long as the macro holds out. That's asking for a little bit much, but it was just that 270. It's like but the 1010 event really has got to show, hey, FSD is real and it's not going anywhere. And so we'll see. I think those 3 are not horrible names to go long on. Okay, I think that's pretty much it for today. We will be back at 3:45. I don't see any other crazy news updates. I would go long on Amazon as well. I think any of the Mag 7, I think all of them are really good. I think in general, the QQQ is not horrible for the next decade. I think I said this last night on the Sunday show, the Mag 7 are going to define the next decade. Hopefully you get a couple other of them join the Mag 7, maybe a Palantir, maybe a Broadcom, right? Those companies, if they keep accelerating, should join that elite name of tech companies. But I think any of them you can go long on and you can probably be good over the next decade. Okay, word of the day is, there's no way I'm saying this wrong, foppish.
Foppish.
Okay, there you go. Foppish. Excessively refined and fastidious in taste and manner. The actor's foppish mannerisms in the play perfectly captured the essence of a vain nobleman. His foppish attire, complete with a silk cravat and tailored waistcoat, stood out at the casual gathering. I think that's Dan Ives right there. This has got to be Dan Ives, dude. His foppish attire stood out. Excessively refined and fastidious in taste and manner. All right, there you go. Word of the day is foppish. We'll be back at 3:45. We'll see if Palantir can get back to $30, and then 8 p.m. we will be streaming this Trump Elon thing. And let's see what happens with Trump and Elon. That is going to be very interesting to see how that ends up playing out. All right. Thank you, everybody. Have a good one. I'll see you back in a few hours, and we'll keep going from there. Have a good one. Bye, everyone.